Hey, what's up, everyone? Let me know if you can hear me. And I think we're on a little bit of a delay, but I am just opening this earnings release, and I'm going to be going through it for the very first time. I see that the stock is up after hours, about 7%. Basically closed on the highs today, up 2.5%. If you can hear me, let me know. But I'm going to go through the earnings right now. Just want to caution everybody. So oftentimes the after hours moves are on light volume, and you can get an extreme reaction in one direction that doesn't end up proving out. So we're gonna have to wait till the conference call. And Evan, yeah, it already flew through 600. $800 seemed ridiculous when I posted my price target on December 31st of last year, which seems like an eternity ago. The stock was quite a ways from 800, and now we are in. Thank you. I see that. You can hear. Now we are in spitting distance, so that's crazy. So anyway, I was not prepared. I thought that the earnings would take a little bit longer, and I saw the stock move almost immediately after the market closed. So I jumped right on, and I'm going to go through the Q4 update right now. And in fact, before I go through it, let me go and see if we have an outlook section, because in my opinion, that is the most important part. Okay. For the full year of 2020, vehicle delivery should comfortably exceed 500,000 units. Due to the ramp of Model 3 in Shanghai and Model Y in Fremont, production will likely outpace deliveries this year. Both solar and storage deployments should grow at least 50% in 2020. Okay, so I'm going to have to do some modeling to figure out exactly what that means. Vlimpy says, I'm tired of this. I'm going to sell my car to buy stocks. Well, it depends what kind of car you have. If you have a Model 3, you should keep it, because in a couple of years you can use it as a robotaxi, if what Elon says is true, and you can make some money off of that. So I don't know, maybe keep it. But in any event, I'm going to have to do a little bit of modeling, which I'll try to do to figure out what the volume means for numbers and for revenue. But the solar and storage deployments growing 50% looks pretty good. And then if vehicle deliveries comfortably exceed 500,000 units, let's just do some quick math. Let's say, I mean, to me, what does it mean to you guys? Comfortably exceeds means, I don't know, could it be 10%? Let's just say it's 10%. And maybe Tesla is now in the beat and raise modality of running a public company, which is a much better place to be in. And by the way, what that means is that you set expectations at a reasonable but beatable and achievable level. And then as the year progresses, you meet or exceed your guidance on every single print. And I think Tesla could probably learn some lessons based on what they did in the past. So anyway, let's just assume that the 500,000 is conservative, and let's say they beat that by 10%. So 550,000, I'm just doing some math on my calculator right now, and the deliveries, I believe, were 367 in 2019. Yeah, so that would mean, sorry for the pop, that would mean that they'd be growing by 50%. And Elon did say on the last call, or the 2Q call, that we should expect 50 to 100% production growth for the foreseeable, for the foreseeable future. So that's in line with this growth, but we're going to have to check and see how that compares to estimates. Let's do a quick update on the stock. So the stock's actually climbed a little bit even since I've started broadcasting. It's now up 7.3%, at least according to Google. So it's crazy to see it with a 600 handle on it. According to Google, 615.05. Okay, and it dipped a little bit, up 6% now. But again, if you're just joining, one of my things is that you really do have to wait for the conference call, and you have to see how the trading goes really through the rest of the after hours trading today, and then into tomorrow morning, and then obviously into the regular session tomorrow, because the volume most likely is going to be light, and you get a much better look into price and price discovery as the volume picks up and people have the ability to digest all of the news. Okay, so we just covered volume briefly, but 50% is a good growth number. We expect positive quarterly free cash flow going forward with possible temporary exceptions, particularly around the launch and ramp of new products. That is consistent with what they have said previously, according to my read, so no real change there. And they say that we expect positive GAAP net income going forward with possible temporary exceptions. There's no change there. Production ramp of Model Y in Fremont has begun ahead of schedule. That is definitely a surprise to me. I was thinking maybe at the earliest by the middle of this year, by the middle of 2020, and maybe by the fall, they would begin delivering Model Ys. So, excuse me, I'll try to pull up this Twitter account, but somebody had actually tweeted out a picture, which I saw probably 30 minutes ago, of maybe a dozen or maybe more what looked like Model Ys sitting in the parking lot at the Fremont factory with covers on them. So if those are Model Ys, I guess this would be consistent with the narrative. And then Model 3 production in Shanghai is continuing to ramp with Model Y production. Model 3 production in Shanghai is continuing to ramp, while Model 3 production in Shanghai will begin in 2021. We are planning to produce limited volumes of Tesla Semi this year. Okay, so that seems, in line to positive relative to expectations, and I'm just talking about the outlook right now. I just went through a minute ago why I thought the revenue should grow roughly 50% just based on production. Now, they did say that productions will outpace deliveries, so we have to be careful about that a little bit. Basically, what that means to me is, we're going to have, well, it means exactly what it says. Basically, we're going to have production that outpaces deliveries, and so, I don't know, maybe there will be a catch-up on the revenue side, which wouldn't be as great. You'd rather see it the other way around, but obviously you can't deliver what you don't produce. So let's just check and see what consensus is expecting vis-a-vis revenue growth. And if I were on top of my stuff, I would already have that, but I want to look it up live with you guys so that we can go through it together. Let's see. Okay, so all I'm doing here is just taking a look at the current year, 2019, and I'm taking the average revenue estimate, which is 24.47 billion. Hopefully everybody can see that right here. And then the average consensus estimate is 30.6. So to my very simple brain, if production is growing 50% and deliveries reasonably keep pace with that number, and then you have the solar and the other businesses growing at 50%, that means revenue should be up 50%. So let's take 24.47 billion and multiply it by 1.5, and I get 36 billion. Okay, so please somebody fact check me if I'm doing this wrong, but my initial take is that looks really good. And I posted a model of my own projections on my Twitter page today, which is IFTF6. I know the handle is horrible, but it's IFTF6. Let's see, we have a comment here. Somebody said, when will it start? I think you're referring to the conference call, 3:30 Pacific, 6:30 Eastern. 3:30 Pacific, 6:30 Eastern. And Graham, you hear me? Appreciate that. Vlimpy, you've got a Toyota Celica. Give me about 2 to 3K to start buying stocks with. I don't use it anyway. That's not a bad idea. That's not a bad idea. Although if you need the car to get to a job or get to school, you should probably hang on to the car, unless you could bike or do something like that. So, anyways, if you're just joining, my first take on the release is that the outlook, which is what I always go to first because the market discounts the future, it looks ahead, and future profitability is what matters for the price of stocks. If you think about it, if you buy a stock and they earned hundreds of dollars a share in all of the prior quarters in the previous years, what does that mean to you? I mean, you don't get any of those earnings. So unless they've accumulated the earnings for some reason and they're about to pay them back to you in the form of a dividend. But the point is that you want to look at the future earnings and the future potential of the company. And that's why, and I've talked about this a lot on my channel, but that's why a lot of times so many people are surprised when they own a stock and the company reports record profits, record earnings per share, whatever the metric is, and the stock trades down. Well, usually that's because expectations were disappointed. And I think in this case, Tesla's moving the right direction. Again, we'll have to see what they say on the call. But my back of the envelope math based on their guidance tells me that revenue could potentially be up in the 36 to $37 billion range for 2020. And that compares to, at least according to Yahoo Finance, that compares to Wall Street estimates of 30.6. So that is pretty good. And let me just go to my Twitter account and pull up my own link and tell you what I thought revenue would be. And I'm going to put it, I'll actually put it over here, or at least I'll try to. Can I do that? No. Let me see. Bear with me 1 second. Let me try to do this. Okay. So hopefully you can see this. There we go. So hopefully you can see this. This is a model that I posted to earlier on my Twitter account. The Twitter account handle is IFTF6 if you are interested in following along from home. And so I put in my guesses for 2020. And again, I should probably just read this disclaimer because who knows who's watching. Maybe it's some really smart lawyer and I'm doing something wrong. But anyway, this information is for entertainment purposes only. You guys all know that. And the information in these spreadsheets do not represent an endorsement of any company like Tesla or a recommendation to buy or sell any security. Oh, and everybody's dropping off, so I should probably stop reading the disclaimer, which I'll do in a second. But no guarantees are made to the accuracy of any data in these spreadsheets, and this includes forward-looking statements, projections, and historical data. And the author, which would be me, owns Tesla stock as of this post on January 29th, 2019. That's still true, by the way. So I first bought in November of 2019 and haven't sold any shares. I've added to my position in 2020. So if you've just joined us, consensus revenue is around 30 to 31. I think based on my very quick take of Tesla's outlook, which was just released on the investor relations section of their website, that you could get maybe 35 to 37 billion of revenue based off of what they're telling us. So you can see here, and you may have to zoom in on your browser. I don't actually, let me try to, no. Let me try to zoom in. Okay, maybe that's a little easier. So I kind of did three scenarios for 2020. These are my guesses, a low, middle, and a high case. And my mid case was 33 billion of revenue, and my high case was 37. Leave a comment if you want me to explain how I get there, but I think what you guys will care about is the mid case EPS was 526, and the high case EPS was 1061. And the 1061 is about double consensus. So when the stock goes on a huge run like this, there's always a question as to like, hey, what's priced in? But I think that whenever EPS doubles, and I think it has the potential to this year in 2020, actually more than double. But I think whenever the EPS doubles and analysts take up their numbers, it is a good thing for the stock. So let's go back for a second and just go through the rest of the release. And somebody here said, so Graham, what's up, Graham? Said 2020 dilemma: sell Bitcoin, buy Tesla, or watch the moment go by. Yeah, it's hard to know. I mean, Bitcoin is its whole own separate discussion. I do have a lot of thoughts about Bitcoin, but maybe we shouldn't talk about that now. When did you find out about Tesla? Said Tornet. I've known about Tesla for a long time. I actually discussed this on a live stream, but I read Ashley Vance's book, which I'll probably do a video on at some point, and I'd recommend it to anyone. It goes through his whole history with PayPal, and it discusses his business relationship with Peter Thiel. And the big takeaway, I think, from him and from understanding what he's all about is that he is mission driven. And ultimately, his goal is to sustain human life by maximizing the odds that the human race is able to survive as far into the future as possible. And that means populating another planet in case something happens to Earth. So that's a pretty big mandate, and there's lots of room for growth. So like he picked a pretty good market, you know, like I don't know. If I had to think of a business like that when I was that young, maybe I'd think of opening a store or something like that. And he's not only changing the world, he's like changing the universe. Vero said, is it me or is the screen blurry for everyone? Let me know, guys, if the screen is blurry, and I'll try to increase the resolution, because I do see here that I might be able to increase the resolution. So if there are any issue, I want the sound to be perfect. Even if what I'm saying isn't perfect, I at least want you to hear me clearly when I say it, even if it's dumb. And I want the resolution to be great as well. Okay. You said better. Okay, that may be because I was scrolling around a lot. Okay. Yeah, I actually, you know what? Thank you, AZ Native. I actually set it to ultra low latency just so that I could keep up with the comments and make sure that I was being responsive and also kind of bring you on the journey as I was reading things. Let's do a quick check on the stock. So yeah, I mean, this is crazy, but the stock is really holding in there. I mean, it's basically holding up 6 to 7% after hours, up $40, up 40.14 as I just said that. It's 620. So the stock has a 6 handle on it now. When I put out my $800 price target in 2019, that seemed like a long ways away. Okay, so I'm gonna go through the rest of the release, and if you're just tuning in, my takeaway is that my preliminary read based on the outlook that Tesla gave, and the first thing that I did was I skipped right to the outlook section of this release that was put out by the investor relations team at Tesla, probably about, I want to say 20 or 30 minutes ago, maybe 15 minutes ago. But the first thing I did was skip to the outlook, and to me, it looks like if you wanted to be comfortably aggressive but also reasonable at the same time, that you could reasonably assume Tesla's revenue might increase by around 50%. And that's favorable relative to consensus. So while we're at it, I don't actually want to get a ton into Q4 because I think the outlook matters a lot more than the past results. But let's just take a quick look and see in Q4, they reported $7.38 billion of revenue. And the estimate was for 7.02, so a $300 million beat. And let me see if I can explain to you why that happened. You know, so one interesting thing here is that if you look up here where my cursor is, I don't know if you can see this, but everybody was kind of pointing to these regulatory credits as helping them. And I actually had a little bit more modeled in for this quarter than 130. I'll show you if I can scroll over. I don't really know how to use Google Sheets. I had 150. If you can see that, I had 150 million. So the point is that they didn't even get helped that much by additional regulatory credits, and it looks like a pretty clean beat. The adjusted EBITDA was 1.175 billion. So let me calculate the margin, because I was assuming about a 13% margin. Oh, and it's right here. Oh, the adjusted EBITDA margin. Okay. Let's see if they give us regular. I'm not sure if I don't believe that they've reported adjusted EBITDA in the past. I believe it's only been so this is the first time they've reported adjusted EBITDA, so I will need to before I give you guys an answer, I'll need to look into that, because they made, let's see, what did they do? Interest expense. Okay, they're adding back stock-based comp. Okay, it looks like the real difference between how I was calculating EBITDA in my model, if you've looked at that, and what they're reporting now is stock-based comp expense of 281 million. So let me try to do this on the fly real quick. I'm going to take their adjusted EBITDA of 1.175 billion. I'm going to subtract 281 million. Take out the stock-based comp. That's 894. And I was assuming a billion. Okay, so that's something to look into. I'll have to check EBITDA, but definitely a big beat on the revenue side. So they put up seven. Oh, where'd it go? They put up 7.3 billion versus roughly 7 billion expected, which is a comfortable beat. And let me make sure I was giving you the right EBITDA number there, which I was. Okay, so if you're just joining, I think their outlook points to numbers which are higher than consensus, which is a good thing. And let's just go through what they say are the highlights. A $930 million increase in our cash and cash equivalents in Q4 to $6.3 billion. They did have about 5 or 5.3 billion last quarter. Obviously, one of the big thesis points from the short or from the bears' perspectives has been that Tesla's going to run out of cash. They're going to run out of liquidity, and they're going to need to do some fundraising in the form of selling shares and diluting people, or maybe they won't be able to repay their debt. Excuse me. So obviously, building their cash position is a good thing, and they have a healthy cash balance. They did generate $1 billion of operating. This is actually huge. They generated $1 billion of operating cash flow, but the key here is that less CapEx. So in other words, they're telling you what they did is purely the cash that the business generated in the fourth quarter minus all of the capital expenditures. And capital expenditures are things like building a factory, building a gigafactory, or putting up money for big capital equipment. So the cash flow that they generated in the fourth quarter minus all of those things netted them $1 billion. So that's great. And they did earn positive GAAP net income. I know that there was some speculation, people that were looking at potentially getting Tesla into the S&P and the associated requirements were hoping for like $1 billion of GAAP net income this quarter. That didn't happen, but that's okay. So this is completely crazy. This has to have the stock moving. One of the things that I'm reading just now for the first time is that the Model Y production ramp started in January 2020 ahead of schedule. I know in my model I had it at the earliest sort of halfway through this year. So we'll see what they have to say about that. Record vehicle deliveries they already gave us. We've been through the revenues a little bit, but certainly one of the things that got the stock moving in the third quarter, and actually let's just go through a little bit of history. So in the fourth quarter of 2018, things were looking all right. Elon's target has been 25 to 30% of auto gross margins for the fleet of vehicles, the SX and 3. And so in Q4, they were at 24. When the Bears really started to get momentum last year, it all started with, if you can see my mouse, the automotive gross margin actually dropping down to 20% and then to 19% by Q2, which is really when the stock hit the lows. And part of the reason for the drop, certainly in Q1, had to do with the fact that they had produced a bunch of vehicles, but some of them they were shipping overseas. And because of customs and the logistics around shipping and a whole bunch of other stuff, they weren't able to actually ship out the cars that they had produced until the last 10 days of the quarter. So it created this very unprofitable scramble and like a logistics nightmare, I think Elon called it, where they kind of had to pull a bunch of rabbits out of hats, and who knows what they did. But the point is that they did things pretty inefficiently in those quarters to try to get those cars overseas. And according to the company, they've solved those issues. Just going to take a minute to read some of the comments. Why do you think that the price went up just before the Q4 earnings? Could be short covering. One of the things that I said in my video today, if you watched it, I did a little Q4 preview. Again, this is my personal opinion, but a lot of people here have probably heard of the news around BlackRock and other huge institutions taking a vested interest in ESG. So like basically investing in environmentally friendly and sustainable companies. And I don't know how you can credibly be an American institutional asset manager or really a manager anywhere around the world and not buy into Tesla's mission. And so what I said in my video is the stock to me is acting like institutions, large institutions, are in the accumulation phase of purchasing Tesla stock. And why do I say that? Because the stock was going up on S&P green days, and on S&P red days, the stock really wasn't reacting that strongly. Like it would have up 3, 4, 5, 6, 7% days, and then when the market pulled back, Tesla would kind of be in line with the market or maybe a little bit worse, but it just wasn't experiencing a lot of volatility to the downside. So to me, that's one sign that maybe really big buyers are coming in. What's that smell? It's fire. Thank you, Vivek. So AZ Native asks, does the Q4 result give it the qualification for being included in the S&P? I am not an expert on that topic, so I'm going to defer to people that have done more work in it. Based on what I have read, though, Tesla would need to achieve a full year of profitability, and what they did in this quarter didn't quite get them there. But you know what? That's okay, because it's almost better to get good news in drip feed form. Like you don't want everything coming out at once. Almost you want to kind of have some catalysts on the horizon and some things to look forward to. Short burn, you say? Let's check in on the stock. Yeah, so it's holding between up 6 and 7%. And if you're just tuning in, one of the things I said is you have to be very careful about drawing conclusions from the trading action of a stock, especially on an earnings day directly after the market close, because typically the volume's a little bit more thin. People don't have all the information yet. We haven't heard from the company. We haven't heard from Elon. The market isn't open, obviously, and so we don't have all of the buyers and sellers participating. So we really need to get some price discovery to find out where the price shakes out. But obviously, this looks pretty good. Obviously, this looks pretty good, and that's up. That's after an up 2.5% day. So the one thing I am curious about, having read through this, and I do think it's a good release so far for a lot of the reasons we've talked about, and throw up a question, any question at all, in the live chat if you want me to dig into anything in particular. I did my own model on 2020, which you guys can look at. It's in a free, or what I'm saying free, as if I would charge for it, but it's in a Google Sheet, which is linked to on my Twitter page. Kevin says 100,000 per share in 2035. Kevin, do you work for ARK? Are you Kathy Wood's son? I hope you're right. That would be cool. Could definitely happen. I'm kidding. I don't know. So what I was going to say is the one thing I did have a little bit of a question about was the idea that they're going to produce more than they deliver in 2020. Like, I wonder what that means. What does that mean about demand? I think shorts are going to be pointing to that. They're going to be pointing to that statement, and they're going to be asking, why isn't demand outstripping supply instead of the other way around? Hey, Castamere, how are you? Right before the close, I added 20 shares at 590. I felt stupid at the time, but now I feel better. Nice job. I didn't do any trading today, but I do have a position. And if you're just joining, established a position in November. I added to the shares in 2020, and I haven't sold any yet, and including I didn't sell any before earnings, which doesn't make me smart, by the way, because I think the audience and the people that comment and the people that post on this channel are way smarter than me, because I feel like a lot of people here have owned the stock for a long time. And even if they haven't, they have really good insights and excellent comments. And actually the message board from this channel is one of the best things about it. It really is, because people give such positive comments and such good feedback, and like people respond to other people's comments with like information. People make these really long posts. Like, I read through every single comment, and people put so much time and effort into the comments and the posts that they make on this channel. It's crazy. So thank you for that. Really thank you to everybody who's watching. And if you're commenting, thank you as well. Thank you, Michael, who says thank you for the information. And AZ Native said the report is at the top of the Tesla subreddit. That would make sense. So Alex is asking, is there a way to buy after hours on Fidelity? There is. Yep. You probably have to go to your computer, I think. I'm not 100% sure. And you have to turn on after hours trading. It's something you may have to call them to do, but in my experience, they can do it for you if you call them. But you just need to call them probably soon, because I would guess that they take off maybe around 5 or 5:30. So why is the stock at 565 euros? Somebody asked. I actually didn't know. Does Tesla trade in Europe? I have no idea. I could venture a guess. It's not going to be a very smart guess, but I would guess that when you convert dollars into euros, that given that the euro is stronger than the dollar, the price is lower. Okay, so Vivek says, do you think 2020 guidance on the call might short circuit the positivity so far? Okay, so that's a great question. Here's why it's giving me pause. So I think based on the implied revenue from the guidance, that revenue could be up by as much as 50%. From 2019, and so that's a good thing relative to consensus, because if you kind of do the math out on that, it means you'd get a revenue number which is higher than consensus. Now, a couple of things. Obviously, the stock has run up considerably since the last time the majority of analysts recut their estimates. So there is some implied upside to the numbers that's sort of already baked into the share price, even though people haven't republished. So that's number one. And then number two, the thing that I'm calling attention to, and let me just go back to it for a second. So here's their outlook. This is, if you're just tuning in, this is the very first slide that I went to, and it's slide 10. It was slide 10 last quarter too. But they talk about how production will likely outpace deliveries this year. So I want to know a little bit more about why. And actually, while I'm asking that question, let me just see what they said. Let me see what they said in the fourth quarter last year, so I can give you a better read on if they typically say that. So last year, going into 2019, so in other words, this was the 2018 report. They talk about they're going to grow gradually through 2019, reach a sustained rate of 7,000 units per week, which they did. They did the Gigafactory Shanghai. Deliveries in North America will be lower than the prior quarter as we start delivering cars. Sorry, I'm just reading through this if you're just tuning in. I know things got a little quiet. Somebody asked a good question, so I'm just going back to an earlier release to try to get the answer. Yeah, so I don't see that statement. If somebody else can find it, let me know. But the part of the question was about, how's the outlook going to be interpreted? One of the things that I'm keying into is the fact that on the Q4 outlook, they said that they expect production will outpace deliveries this year. I don't know by how much. It could be by like 1,000 vehicles and then it wouldn't matter, or maybe it's more substantial. But either way, it's something that I want to look at and that they're definitely going to get questions about. And the reason for that is because from an accounting perspective, like if you produce 2,000 cars, but you only sell 1,000, then you have the cost from 2,000 cars and you only have the revenue from 1,000. So even though things will catch up eventually, it kind of makes your financials look a little funky. And by funky, I mean bad. Yeah, so somebody says, actually Vivek says Q1 is historically weak in the auto sector, but the coronavirus may kneecap China's ability to help improve the numbers. Yeah, Elon, I think, has been kind of helping the market along with the pacing of what 2020 will be a little bit, and we'll have to see how everyone digests this. But on the third quarter call, or maybe the second quarter call, I can go back and look. But if you want to, you can just Google, Tesla transcript Q3, Tesla transcript Q2, and he talks about how in 2020, Q1 won't be so great, Q2 will be better, but not as great, and then Q3 and Q4 will be monster quarters, like really, really good. So I think he's already prepared people a little bit for that seasonality, I think is what you're talking about. Ben Lee says, how many Tesla stock do you guys have? I don't know, everybody. How much do you have? Be interesting to add up everybody in here and see. Is this short season? Has it already ended? Oh, my bad. This is winter. Somebody's got 45 shares. Somebody's got one. That's 46. That's, well, hey, we're going to need to keep recalculating because the stock keeps going up. Oh, here we go. All right, it's coming in. You know what? I'm going to add it all up. And see how much. Wow, somebody got 100 at 187. That was pretty much the low tick. I'm going to add up all these shares right now and see how much we have. Let's see. Okay. I'm going to do it quickly. 45, 1, 8, 251, 1300. Oh, I'm not even typing. Why isn't this working? Oh, I think I know why. No, that's not why. Oh, because this sheet. Well, just let me open a Google sheet without signing in. No. All right, well, fine. Then I'm going to do it using my head. So we got 45 plus 250. That's 300, 1600, 1700, 2000, 2050, 4050. This person has 2,500 shares. Wow. So that's 5,000, 7K, 7,500, 30 shares, another 50. So it's like 7,600, another 345. So that's 8,000, 8,200. Somebody's got 420. So far we've got about like 8,500 shares. And the stock's at like, man, the stock keeps going up. Sorry, I didn't mean to shout into the microphone, but it's been a little while since I looked at the stock, and we're now at 9%. Okay. So we got 8,500 shares. The stock's at 633. Doink. So we've got 5.3 million worth of Tesla stock in this channel right now, boys. So that is, and actually more because people are. Oh, Steve Fink. Just kidding, not 420. Okay, well, I'll have to take that out. But we have like over $5 million worth of Tesla stock. So I really appreciate you spending your afternoon or your evening or your morning here. And it's kind of fun to do this together. This is really cool. And if you're just joining, I was talking earlier about how the comment section on this channel is like the best part about it because everybody is so smart and people put a lot of time and like research, or even if it's just a short comment, a lot of thought into what they say. And I read every single comment, and I think a lot of people do as well because honestly, the comments are way better than the show. I don't really know what I'm talking about in the show. I just wait to read what people say in the comments, and that's how I get my information. Kyle bought 55 shares at 200. Congrats. Just buying the dips. Well, if you are only measuring as of tonight, you're not going to get a chance to buy the dip. I'm sorry, man. So we're now up 10%, which is making me want to go take a look at a volume chart and see if I can determine how much volume is trading after hours. So I believe our volume on the day was 13.6 million, and that's about 2 million shares over the average, which is 11. In fact, if anybody hasn't, let's see, I can maybe look it up on my phone. Let's see. Sorry for the dead air. Keep commenting. Wow, okay, so if I have this right, and my browser may be a little bit out of date or whatever you want to call it, but I believe Tesla traded 13.6 million shares today during regular market hours, which is roughly 2 million shares over and above its average volume. So that's number one. Number two, what I'm seeing here, and this may be on like a 15-minute delay, what I'm seeing here is that 15.8 million shares have traded total. So that's an additional 2.2 million shares traded after hours, which is significant. Let's see how much dollar volume that is. 2.2 million shares at, now I got to do 645. So that's about 1.4 billion worth of value traded, and there are people on two sides of that. So this is a little crazy. I don't know if it's this sub. I think it might be this channel, because I've made a joke, and it is a joke, about how every time I post a video about Tesla, the stock goes up. So now we've done 2 posts on Tesla today, because I'm counting the Q4 earnings preview, and I'm also counting the live stream, which is a little bit unfair of me. But Tesla stock, since we have started here on the channel, and we've been going for 45 minutes. When we started, the stock was up about 6 or 7%. The stock is now up 11.7%. So I will give you my get. Sorry, the stock's up 12.7%. I got to keep up. I will give you my thoughts on why the stock is up. I covered it at the very beginning of the live stream. Yeah, and Chris says it was stuck on 6% for a while. Why would it soar to 10% in like 2 minutes? So right now it's at 12%. And Chris, that's a great question. I was wondering the same thing, which is why I wanted to take a look at the volume, because I would just caution everybody not to read too much into after hours trading. This is definitely a strong reaction, and the volume is there to support, some real healthy trading activity. There's no question about that. On the other hand, we haven't heard the call yet. We haven't gotten some of the tough questions. Remember, there are going to be some salty analysts on this call. There are going to be some analysts who have had to sell. I was reading, I think, and don't sue me if JP Morgan is listening right now. I'm sure they've got better things to do. Or actually, no, they should actually, anybody on this live stream, if you know somebody who works at JP Morgan, tell them to start watching this channel, or at least tell them to start reading the comment section, because then they'll get a little bit more educated. But anyway, I think I read in an article somewhere that they have had a sell on the stock since 2015. So they've been pretty wrong. That's okay. Investing in the stock market is hard. For sure. I think we're all lucky. There's no question about that. Like, the stock market's volatile and stocks go up and down, and we shouldn't take this for granted, and we'll see what happens tomorrow. But the point is there's going to be a lot of salty analysts on the conference call this evening, and they'll probably be asking some pointed questions. They're cognizant of the fact that the stock has had a real run up, and they're going to want to justify it with numbers. And so they're going to look to see, like, hey, how much can I take up my estimate based on the increase in my forecasts, in my financial forecasts, and can I mesh those two with the current stock price? Dwizzle says, is this a short squeeze? It's hard to say. So I made, in fact, my video that has the most views on it was almost like half wrong, but I think it will end up being 100% right. And the video that I made, it has like 30,000 views, is on the short squeeze. And it says, is Tesla the mother of all short squeezes, or could this be the mother of all short squeezes? And Dwizzle, talking to you, I basically drew the conclusion that this is not a short squeeze, that Tesla's basically going up for fundamental reasons. And the reason that I think that is because the short interest, the number of shares short as a percentage of the total shares, has been much higher in the past that compared to now. Kyle says focus on stock price is not healthy. Yeah, I mean, it's just one data point. I don't totally disagree. There's other things to do in life, and this is extremely short term, but I know a lot of people are interested in the report, and this is a big vindication for people who have felt like they've understood the story for a long time, and that Tesla, who is a company with a big heart, I think they have a really big heart and a big mission, but they've been under attack for a long time, and I think a lot of people will feel vindicated by this report. Oh yeah, and Kyle, you're right, because you say if you were looking 5+ years ahead, then the current price is irrelevant. That's true, but you still want to see like how the stock reacts to different news items, in my opinion, because it just kind of tells you where expectations are. Okay, Vivek, you said Gene Munster just dropped a monster tweet on Twitter. Oh, crap. Let's see if I can even... You know what? I can't even sign in over here. I have an incognito window because who knows what kind of weird stuff will pop up while I'm on a live stream. I feel like that's got to always happen. So I'm just going to pull it up over here. And I'll read it to you guys. And maybe I'll try to like copy and paste it. So, Gene Munster. And let me just go back to the live stream for a second. So for people who don't know Gene Munster, he's a managing partner at Loop Ventures. And I haven't paid attention to every single thing he said about actually not even close. I haven't paid attention to every single thing that he said. And one of the reasons is I just try to discount what Wall Street analysts say and like really just think for myself, because Wall Street analysts, really except for ARK, they think incrementally. So they're like, okay, the stock's at 100. How could it go to 120? Or they earned, $1 a share last quarter. How could they earn $1.20 a share next quarter? They really don't do that long term, in my view, in my experience, in my whatever. They don't do that long term thinking of like, where's the company today versus where they could be in several years from now, and what will those two things look like? So anyway, that's why I don't pay a huge amount of attention. It's better to think for yourself. But anyway, Munster Gene on Twitter. I want to make sure I'm pulling up the right one. He says, Elon appears to be entering a new persona, almost quiet assassin-like. 3 of the 4 pillars of the short story are eroding, including, number 1, are people ready for EVs? He's saying yes, they are. Number 2, can they build them? He means, can Tesla build electric vehicles? Yes, they can. And number 3, and this is the ridiculous one. We covered this at the very beginning of the show. I can't believe it's still a thing that the shorts are focused on. It's just crazy to me. But anyway, number 3 is, will they run out of cash? And, in my opinion, the answer is emphatically no. That's just ridiculous. Completely ridiculous. The idea that Tesla would run out of cash. They have over $6 billion. And they're generating cash flow. So the future is the future, which means it's inherently uncertain, but my opinion is they're not. So the remaining pillar is valuation, Gene says, which historically is not a reliable short foundation. I think he knows, I think I know what he's saying, and I'll tell you. All indications point to the story continuing to move higher. Wow. I think that's the bombshell you're referring to. Key question remains, how much is a foundational company in the future of transportation worth? We think more than the current $110 billion. Okay, so for anybody watching this channel and the people commenting, that won't be a surprise, but it's cool to see mainstream media kind of say that. Maybe I'll pull up CNBC. I don't know if they'll be happy if I broadcast them. Let me see if I can do that, and tell me if you guys can hear it. I think it'll just be interesting. I can bet that they're talking about it right now, and I would like to hear what they have to say. So let's just tune in. And if you can hear this, let me know. Let's see. Okay. Here it is.
The stock is up nearly 12% after its own big beat. There it is right now, 11%. You're pushing $650 in the aftermarket. Let's get to Phil LeBeau with more details. Phil, why is this stock up so sharply after hours?
Great
LOL, let's see what they have to say.
Even better guidance. If you're a Tesla bull, there was very little to be disappointed in when it comes to this report from Tesla. Let's talk about the numbers for the fourth quarter. Beat on the top and the bottom line by a wide margin, earning $2.14 a share versus the expectation of $1.72 a share. Revenue coming in better than expected at $7.3 billion. Not bad. But here's the
We
reason,
talked
Scott,
about
that I think
this.
the stock is really taking off. The guidance in terms of deliveries for 2020. Now, just for a point of reference, remember, they delivered just over 360,000 vehicles last year. Most on the street were in somewhere between the 465 and 475,000 as an expectation for 2020. Tesla says it will comfortably exceed 500,000 vehicles being delivered this year. A couple other notes from the company's guidance when it comes to 2020 and beyond. Model Y production ramp has already begun.
Okay, guys. So, yeah, I mean, LOL. Honestly, they're saying things that Tesla has been saying for literally the past year. If you maybe 9 months, but if you go back to their earlier conference calls, I think I may have just skipped a little bit there. So let me know if you can still hear me. But if you went back to their earlier conference calls, which I did for you guys, and I made a post about it today. I went back and I started at Q1 of 2019, and I went through Q2 and Q3. And if you listen to what if you listen to what Tesla had to say, then the idea that they would be producing 500,000 vehicles this year would not be a surprise to you whatsoever. So I'm a little bit shocked, quite frankly, that people weren't expecting that. Let me say this though. Let me back up even a little bit more and just tell you. Some of you have heard this before, but my initial premise of investing in Tesla was built on a very, very simple idea. And it had to do with the fact that, did you believe Elon Musk was a fraud and that he was a liar? Or did you believe that he was really trying to do something positive and change the world and kind of reap profits as a byproduct of that? And the shorts seem to really be premised on Elon is up to accounting gimmicks and accounting tricks and obfuscating guidance and hiding safety issues with vehicles and things like that. And all of these things that just sounded so fundamentally ridiculous to me. And let me tell you why. Even if you thought, okay, this guy engages in a little bit of puffery, he talks his book, so to speak. He kind of pumps his company up, maybe over and above what a normal CEO might do. That's fine. But take a look at what he does with SpaceX. Can you think of a private citizen who is more intimately engaged with the government, literally shipping stuff in a rocket and sending it out into space, kind of representing our country in a way? There's nobody else who does that. So the idea that this guy would have as a side business a little lemonade stand of a car company that is engaged in defrauding the public by putting them in dangerous vehicles, which cause them to crash, and in the meantime, engaging accountants and employing financial trickery and wizardry to try to defraud and deceive the investing public into buying a stock. I mean, how crazy do you have to be to assume all those things are true? It just sounds ridiculous. So here's a guy who's working closely with the government in one company, and in the other company, he's just devoted 50% of his life to engaged in out and out fraud. I mean, why would you assume that? Kyle says, please tweet this clip out. Which one? But anyway, so my initial premise was like, hey, is he telling us the truth or not? And I can clearly remember seeing people on CNBC and on the internet laughing as they described this idea that robotaxis, that 1 million robotaxis would be on the road in 2020. And shorts just have conspiracies. Elon elected to be paid just in stocks, and he borrows money to do so. If he was a fraud, he would go for all cash. Yeah, so Johan, I think if that's your name, if I'm pronouncing it right, not only does he get paid in all stock, but he actually, and this is hilarious because he spends so much time at Tesla because of the laws in the state of California, he is required to accept minimum wage from the company. So they're actually required to pay him because of the laws there. But he doesn't accept the money from the company, but he does pay income taxes on that minimum wage that he makes from Tesla. So that's pretty funny. But anyway, so I saw people laughing about robo-taxis and saying, this guy's, lost his marbles and he was on Joe Rogan doing weird stuff and, we don't trust him. And as I had said, I didn't have the stock, but I had read Ashley Vance's book. I had listened to things that people like Peter Thiel had said about him. And I think PayPal's like a $100 billion company. He kind of just like started that in his garage and then abandoned it or sold it. And like, I don't know, that seems like a kind of a good first, or it was actually like his second project, but a good second project to do. And so I went back to Autonomy Day and I looked at what he said about the robotaxis. And what I found, in my personal opinion, is that he communicated like a seasoned CEO, like a reasonable, cerebral, articulate, trustworthy CEO. And he basically said, and let me just see, I'm seeing, just started trading a week ago. Bought 25 Tesla stock after some research. Nice. So Elon basically said at Autonomy Day, hey, look, we have this over-the-air update that we can do. Every car that has been produced after October of 2016 comes equipped with FSD, with full self-driving capability. And all we need to do to wake up the fleet, to wake up the robotaxi fleet, is to send an over-the-air update to those cars, and we will have more than 1 million of those cars on the road by 2020. And that's our opinion. Our opinion is that the cars will be able to operate without a driver in them. So when I look at somebody describing a robotaxi in those terms, I see something that, takes reality into account and, is making reference to the fact that it's a forward-looking statement and all of those things. He's not a crazed person saying like, hey, we're going to produce 1 million New York yellow cabs and have a bunch of cars, a bunch of checkered taxis driving around, SFO and LaGuardia over the next 12 months and, watch out. I mean, it's just not what he's saying. So the fact that his statements were being portrayed like that was I don't know, it was like kind of offensive to me. And I just started looking at what the company was saying about their guidance and how they communicated it, and that's when I got interested. Yeah, the comments are great. I have the stock up here. By the way, if you go to my Twitter account, and this is not a plug to follow me, I don't actually really even care about Twitter. I only care about YouTube, honestly. But if you go to IFTF6, I posted a copy of my model earlier this morning, so you can go just look at it and see what my earnings estimates were. And I think they're pretty close to what the company's guidance was. You can look for yourself. I'm gonna go get some water. I'll be back in like 15 seconds or less. Hey, what's up, everyone? Back. Excuse me. Feeling a little bit more hydrated. That was a lot of talking. That was like an hour and 3 minutes of talking. The bears are hungry, somebody says. So John says company has to pay $100K to buy an outfit robotaxi, then pay someone to collect data. We pay Tesla to make the car, and we collect data for them for free. Place your bets. Yep. If you haven't seen it, my very first video that I ever posted to YouTube, I used only my iPhone. I didn't even have an internet connection, so I just used my iPhone and a couple of pictures, like still images, and a Sharpie and a piece of paper. And I talked about the robotaxi opportunity, and I just went through it for about 10 minutes, and I described why I thought, in my personal opinion, that Tesla would be worth more than $800 a share based purely on the robotaxi business alone, without any other value, without any other value from any of the other businesses. And let's go back and see like where the stock was on that day, because it feels like 100 years ago. and 800 felt really far away, and now it doesn't. Yeah, so it was at 418, and on January 2nd, the stock hit 420, and that's when Elon sent out his famous tweet. What a difference a year makes. By the way, I made this comment on Reddit somewhere, but I said, and people thought it was funny. I said, how many bears do you think are now hoping for a takeout or a go private at 420 a share? I think they'd give anything to be able to buy their stock back at 420, which is sort of ironic given where Elon was last year. Remember, or 2 years ago. No, I guess it was last year. He was in trouble with the SEC. He had the funding secured tweet. I think the stock actually rallied like 17% the day that the SEC came out and sort of cleared him and allowed him to remain as CEO. I actually looked at that in one of my models. I think the stock went up 17% the day that the company put that issue behind them. And John says, and the market is pricing Tesla's autonomy at zero currently. Yeah, and if you look at my model, I'm sorry that I keep coughing into the mic. It's extremely unprofessional of me. I apologize. I'll try to do better. But anyway, yeah, and if I even look at my own model, I am not dropping Robotaxi in there. And you can still get to some pretty decent numbers. So, yeah, you're right about that. Also, let me know how the stream is doing. I see a little bit of lag here, and if we have too much lag, I might dial the resolution down a little bit so that I can keep things moving. Okay, doing just fine. Appreciate that. Thank you, Pseudo Bob. I appreciate that. It's a bit choppy at times. Okay. Yeah, I'm seeing a little bit of an issue with the internet from time to time, but it looks like it's up. Who knows? I don't know. I feel like I see people all over the world with like perfect internet connections. They have no problems, and I'm like in the middle of civilization, and for some reason it seems to be very hard for me to connect to the internet. I don't know why that is. Gene Munster, did he tweet again? No. So let's see if Elon has tweeted. So this is pretty awesome. I don't know how many of you saw this. Elon tweeted this 3 hours ago, which was before they released their earnings. But Elon says, a friend of mine sent me this excerpt from a Tesla blog that I wrote 14 years ago. And it says, Elon in 2006, the master plan is, number 1, build a sports car. Okay, so they did that. Number 2, use that money to build an affordable car. They did that. Number 3, use that money to build an even more affordable car. So he's talking about the Roadster, the Model S, and now the Model 3. Number 4, while doing the above, also provides zero-emission electric power generation options, and that's Tesla Solar. So I don't know, 2006, that's like 14 or 15 years ago, and he has done all of that, which is crazy. So yet again, for the people who laugh at him and say, he's busy with accounting gimmicks, and why would he waste his time? Why would he waste his time focusing on accounting gimmicks and tricks? And if you look at interviews with him, there's a good one on the Third Row podcast, but he says, I'm not an investor. The only public stock that Elon Musk owns, according to him, is Tesla. So he's not diversified. He's not trading. He's not doing anything, indicative of somebody who who wants to manipulate the price of a security or a stock. And by the way, to what end? I mean, if he's attempting to manipulate the price of Tesla, like what's his end game? How would he think? How would a short envision his plan playing out? Sounds like you need a Starlink. You know what? Does anybody know, does Tesla have Starlink? If they do, I would sign up for it just based on their performance today. I will sign up for Starlink. I will do it unless it's like something egregious. And if it is something egregious, maybe I'll just do it for 1 month just to advertise for them. Okay, somebody says not yet. I show that my screen is dark, but maybe somebody else can tell me if they can see the screen. And if they can't see the screen, I might dial the latency up a little bit to give some buffer to the stream so that you guys can actually like see what I'm doing. By the way, if you're watching and you haven't been to the channel, I think there's like 20 videos or so. My stream is lagging. Okay, that's annoying. Sorry about that. I'm not sure what that means though. Like, is it lagging? Okay, I see the screen again. When you say it's lagging, is my voice just behind the screen, or like is something else going on? I don't want to lose people who lose interest because they can't see what I'm doing, because that would be annoying. If you want to take a look at my Tesla model, which I released this morning, and it's just like in a Google sheet. It's pretty simple, but it has a lot of detail in it. And I actually I literally stayed up all night. I talk about in the video how I apologize for releasing the video so late because I started creating the model, and as I kept working on it, I wanted to add more and more and more things to it. And the more things that I added to it, the better the data looked, and I wanted more data to support my evidence for my 2020 guesses about what the company could earn. And so I kept adding things to the model, and it became like 4 in the morning, and then 6 in the morning, and then it was like 8 in the morning, and the next thing I knew it was 9:30, and it was like time to release the video. But the point is I put a lot of time and effort into the model, and if you want to just go to Google Sheets and even just like take it with you and look at it later or whatever, you can do that. And just go to Twitter, www.twitter.com on the internets, and go to IFTF6. And I'm not promoting my Twitter because I only care about YouTube. But go there, and you can see the link to the model if you care. But also, I'm here, so you don't have to look at it. If you wanted to look at it, you would have stayed up all night doing it. But you actually have like things to do, unlike me. Okay, thank you, Dennis, for that. I appreciate the feedback. That's a good point. I've heard that about streams. Dennis said that the connection's clear in Salt Lake. If it's clear anywhere, it's not you. Let's do a quick update on Tesla stock. Man, so we are holding between 11 and 12%, which is unthinkable. Not unthinkable from a longer term value perspective, but just unthinkable in the sense that they put out their release a little bit sooner than I was expecting today. I saw the stock jump after hours. It kind of went up 6 or 7%. It started holding there. The stock started building volume. The last time we checked, I think several million shares had traded after hours. The regular hours trading today was over 13 million shares, which is over 2 million shares more than they trade on average. And actually, if anybody has an update, let me see. I'm anybody, so let me see. I'm just going to go ahead and take a look at the volume. And then I'm going to put CNBC back on the line because they must be losing their minds over at CNBC. They must be losing their minds. But this has to be good for ratings. I mean, they've bashed the stock. You know what? Actually, I want to back up. I see a lot of people who say that CNBC bashes the stock. I don't actually think that that's true. As much as I want to say that it is, I think they've been... I have a lot of thoughts about CNBC, actually. Maybe I shouldn't air them here because I consider them to be helpful to my channel because I use them for research and stuff. Here's the thing about CNBC. They are helpful, and I love that they exist, and I hope they continue to be a channel forever, but they're doing analysis on such a short timeline, like second to second, that it's really hard for them to establish a cohesive or a coherent narrative about a lot of things or anything. And they have people on all day who have, in some cases, crazy opinions about stuff, and opinions that aren't well researched or aren't well thought out. And so as a result, you could go insane if all you do is try to get your news from CNBC, not because they don't report well. They do a phenomenal job of reporting, but they just have information overload sometime, and the snippet to snippet, kind of fast cut, fast take type of analysis that they do is just not conducive to making money in the stock market, in my opinion. Somebody said private at 420. I said a little bit earlier that I bet any short right now is praying that they could buy back their shares at 420. So what a difference a year makes. And let's see what the Tesla volume, the after hours volume is up to, which I consider important. Wow. So you guys, this is crazy. So 17 million shares total on the day, and about 13-ish million during regular hours. So 4 million shares after hours, which is a lot. And again, I think the more the volume you have, the greater potential that you're getting true price discovery. If the shares jumped on, just a just a few 100,000 shares or a million shares or something like that, it's not as meaningful. But when the trading gets up into the multiple millions, that tells you something more. By the way, if you haven't liked, I should say subscribed. If you haven't subscribed to the channel, please take just 1 second to do that, because it just helps to make everything better. It just helps to notify people when videos come out. And I post videos every weekday, and notifying people helps the videos get views, and it just helps it spread, and it just makes it easier to make these videos, because I can put more money into increasing the value add, the value add of the content. And by the way, I'm not doing this to make money, because just this microphone, I think I've spent like 100x on this microphone, what I've got from the YouTube channel. So it's not about the money, but it is just about increasing the audience. And it's something that I would really, really, really appreciate if you would do it. But I know, because I see a lot of you, and I read all the comments, I recognize a lot of these names. I know people comment. I know people comment on the videos here. I see them. And anyway, if there's anybody here that hasn't yet taken the time to subscribe, by the way, you can subscribe and then not turn on the bell and never hear from me again, or you could even block me. But just before you block me, subscribe. Or maybe there are some bears here that are looking for some ammunition against the longs, and they're watching because they want to figure out what it is that we know versus them. And the answer is I don't think we know anything, but I did a video on this. I just feel like, we've woken up. I feel like we see the world a little bit differently than other people. And it's a good feeling when you feel like you have people that understand you. And I think everybody here, based on the comments, falls into that category. William says, rip Tesla shorters. Well, it's okay to have shorters, because think about it this way. I mean, if you want to buy the stock, somebody has to sell it to you. So short sellers sell the stock. And maybe they held the price down for some of you so you could get a better entry point. And then they'll have to buy it back from you later. Yeah, Himalayan. That's right. I think it's Eugene. Himalayan salt stocks off the charts. That is a deep cut reference. How you doing, my friend? Yeah, Tesla rubs them the wrong way. So if you just tuned in, Tesla stocks up between 11 and 12%. I was just starting by looking at Elon's tweets to see if he had pushed out anything today. And he basically pushed out a tweet about his master plan from way back in 2006. Let's see. I'm just going to type in Tesla Q. And see if anybody's saying anything. So somebody on Twitter said, this is the time to short. Oh, he's saying short Tesla Q, which is sort of funny. That's like a double reversal. This is time to short Tesla Q again. I really hope we are seeing 700 tomorrow. You know what I'm going to try to do, guys, is I'm going to try to put the conference call on so we can all listen together. And would you just let me know in the comments if you can hear this? Let me just try doing a video. Tesla. I don't think Tesla put their... Oh. That's sort of annoying. Sorry. So if you can hear that, okay. So you can hear these ads. Let's see what they have to say. Yeah, cool. I understand that. No audio. Okay. No problem. I can set it up, I think, so we can hear. Yeah, you can hear me. I'm just going to try to set it up now. Yeah, so the call, somebody asked when the call is. It depends. Well, it actually doesn't depend where you are in the world. The call goes down at 3:30 p.m. Pacific time, which is 6:30 p.m. Eastern. And where I am, it's 5:45 p.m. right now. So in about 45 minutes. Somebody said, yeah, that 2 mil call guy is going to be rich after tomorrow. I actually tweeted about that. He may have been a short trying to protect himself. You don't know, he may have been trying to hedge himself. So me personally, I always think it's dangerous when people look at put and call activity and they assume that somebody's really bullish or really bearish on a stock. It could just be a call buyer. Well, the call buyer could be somebody that has a massive short position that's trying to protect themselves against what just happened, what would have happened to them this evening, which is being short a stock that is up 11.5%. So, wow, okay. Ran off the side of the road a little bit there. So the stock is approaching $650, which is just crazy. Hey, CJ says, what other stocks do I like? So give me some feedback. I'm trying to figure out the best way to roll out stocks. And the thing that I don't want to do is what I was thinking with Tesla stock that there would always be a dialogue to have, that there were enough interesting and engaging and smart and interested people that are involved in the Tesla conversation that there would always be something to talk about. And my only fear with the other stocks is if I put out something or tweet something or whatever, make a video on a stock and then don't say anything about it for a week or two and something happens, I just don't want somebody to lose money or to end up in a situation that I don't want them to watch my video and then end up in a situation that they didn't want to get themselves into. And by that, I mean losing money. So I haven't really figured out a way to do that. Somebody said NVIDIA and AMD. I feel like those are meme stocks. Well, they're good in the sense that you're right. There's a healthy amount of dialogue always going on about those. I don't know them very well, honestly. I did own AMD earlier this year. I don't believe I've ever owned NVIDIA. I like how Kramer named his dog NVIDIA, for those of you that don't know that. I think when it was surging on the crypto hype, a couple of years ago, he got a new dog and he named it NVIDIA, LOL. And then it went down. Yeah, just personally. I mean, no, all the stuff is personally. I don't think, what I might do, CJ, is just do like an analysis on a stock that I don't even own. Like just take, if I do a poll and get enough questions from people and they want to see like what I think about a stock, I might just do that as opposed to like pitching things. Because again, like as much as I want to be like, here's what I want to do. I want to maximize the amount that I help people, but I also want to like entertain people and I want to keep the conversation moving and I want to keep things interesting. And I do not, the last thing I want to do is to contribute in any way to somebody like losing money. And I just feel like if I do a report or if I do a long form video on something that I'm not 100% on top of, and then something goes sideways, that like I just don't want to put somebody in that position. Okay, so yeah, this is awesome. It feels like investing in SpaceX early. You know, it's so crazy. The market cap of Tesla is big, but doesn't this feel like a startup to you guys? Like it literally feels like there's a small number of people. And I know it all feels like we're kind of bouncing off of each other's ideas and like we all get, you know, what the other's saying, etc. But I promise you, this is a small community. It's a small number of people that understand the upside of Tesla. It really is. And like these are, in my opinion, people that get it. And I actually did a video on that. I think it's called like memes, something with meme in the title. It feels like multiple startups. Well said. I saw somebody do a video, by the way, on the Boring Company and comparing it to Tesla. I don't believe that Tesla owns the Boring Company. Just a heads up. And somebody can correct me on that, but you don't own the Boring Company if you own Tesla. But yeah, it is like owning a startup. And actually, Elon said on the Q3 call that he said the energy business, maybe I'll pull that up if people are curious. He said that the energy business is the most underappreciated of all Tesla's businesses, and that over time he expected it to become as large as the auto business. You know, LOL. I mean, I would love to own Boring. Yeah. You know why? Because traffic is one of those evergreen problems. You can never get somewhere fast enough. So as long as there's traffic in the world, I think the Boring Company could be really valuable. And he also has experience working with governments. You know, it's not easy to get a car certified. It's even harder to get a rocket certified to fly into space. It's extremely difficult to get autonomous driving software. I still can't believe that they have software which allows people to engage autopilot and that it's approved. I mean, it's safer on a per miles driven basis than a human driver. So logically, you know, it follows that they should be able to activate their autopilot software. But it's just crazy to me how much Tesla's been able to accomplish. And one of the shorts, you know, Mark Spiegel was talking about how, well, all of these legacy OEMs have all of this experience and they're able to sell their cars profitably. And that means that they're better positioned than Tesla. And what I said to that was, well, if you had a bunch of experience selling horse and buggies, and then the combustion engine came along, how would your experience with horse and buggies help you to sell or manufacture or produce cars? It wouldn't. So Tesla has created a totally new category. I don't even think they're competing, quite frankly, with Ford and GM. So people have asked me in the past, hey, do a comparison between Tesla and the other autos, and they're just not an auto company. You know, they're a software company with wheels. What about, okay, so CJ said, what about Uber and Tesla selling or sell driving taxis? Explain that question because I'd like to answer it. Yeah, so CJ, you said they can work together. Interesting that you brought that up. So Tesla is going to make it so that if you use their autonomous software, you have to give Tesla a 30% cut. And you also have to use their Tesla app if you're using the Robotaxi feature. So basically what that means is like it's an Uber killer. If you're doing autonomous taxi, at least as of now, they're not going to just let Uber plug into the Robotaxi Tesla network. They're going to make you go through the Tesla app. So that's pretty cool because it's like they created Uber accidentally. So Julius said, still enjoy the chairs are underappreciated. Can you explain what that means? I saw that. I didn't know what he was talking about. Julius is referring to, I think, a tweet. So Vivek is saying, do you think there will be a good entry point between Q1 and Q2 when short FUD accelerates after seasonal delivery dip? I expect volatility. Possible. Yep. Possible, but I'm not saying that because I know. I'm just saying that because it's possible. And you are right that historically, seasonally, Q1 has been weak. When is the next entry point? Well, let's see what happens with the stock. You know, we still have the conference call to get through. Also, don't forget, like, we haven't heard anything. We haven't heard everything from the company yet. We haven't heard, I don't think, anything about Robotaxi. I should probably go through the release because I kind of stopped short once we got the biggest pieces of data. Let's see if they say anything about, no, nothing about Robotaxi. FSD, okay. To date, Tesla vehicles have driven over 3 billion miles in autopilot mode. As our fleet grows, autopilot miles increase exponentially, adding yet more data to our neural net. I made a video on this, by the way. It's called Tesla Stock 800 Still, and it has some really cool clips about the Tesla neural net, and it has clips about Elon sort of calling people out for referring to him as a fraud. And like, I'm actually really proud of that video, as dumb as that sounds. It's a good video, and I think you should watch it. And I know a lot of you have, based on the seeing your names from the comments. But anyway, all Tesla vehicles with our FSD computer have been updated with new software that can better detect new details in their environments, allowing us to show various lane markings, traffic lights, stop signs, and cones, as well as other vehicles and road users, etc. So they go on to say we are currently validating this functionality before releasing to customers, and we look forward to its gradual deployment. So we got to see what that means. I know some of the shorts, or some of the people who are, I think, sort of less informed on the Tesla story, refer to like these different levels of autonomy. Like there's level 5 and a whole bunch of other stuff. Tesla broke it down into 3 categories. And if you want to see more about this, you can go to the Q3 call. But I really liked how Elon broke it down. He said there's 3 categories as far as autonomy. For them, one is the car can operate in basically any environment, but not every environment, and so it requires some supervision. That's level 1. Level 2 is the car can operate without any supervision or anyone driving anyone in the vehicle. That's level 2. And then level 3 is that the regulators end up sharing their view of level 2 and approving the vehicle and the software for use. Very simple, very cut and dry. You don't need to argue about that. You know, you can disagree or agree, but he was very, very clear. And I loved that statement and that comparison that he drew, because he kind of went over the top of, and I've heard people recently, like very, very smart people that I talked to about Tesla stock, have said like, hey, you know, I heard that Waymo's at level 5 and they have a geofence and they're driving around Arizona, and like, you know, Tesla isn't even at level 2 yet, or whatever it is. And like, and I actually said to the person, you know, that, you know, there are videos on the internet of people falling asleep in their cars as the Tesla cars drive down the highway. So that seems pretty autonomous to me. And they weren't even aware that those videos existed. So like, you know, you have other companies that are ring fencing certain areas, and then you have Tesla that's literally doing autonomous driving in a highway environment. Okay, Matt Burns just said we got a Adam Jonas tweet. Let's go right to it. I'll stop rambling. So this looks like a joke tweet. This is Bear Adam Jonas. which says new Tesla Q Tesla price range from our model: bear $10, bull $15,000. Stop emailing me. That must be a joke. Somebody says, Kathy, is that you? So in the autonomy day sort of analyst day that Tesla held in April of 2019, they actually discussed why they didn't do geofence. I think I have to go back and watch it, or maybe somebody here did, but I think they tried geofencing first and it didn't work, and so they went to neural net. And the basic reasoning, I'm going to dumb it down just for myself because I'm not really smart enough to understand all this stuff. But their point about geofencing was basically that if the environment changes, then the network isn't smart enough to handle that change. You need to update things constantly, and there are just too many variables to really keep track of and really make the thing effectively autonomous. Whereas with a neural net that can render images in 3D from like a very small number of cameras and do it accurately time and time and time again, and also like predict where a driver would go based on a bunch of deep learning and historical precedent, and can also get better with time, like that's what a neural net is. That way of running the FSD was just better. Yeah, so somebody says 6K is ARC's forecast from last year, and they are coming out with a new one. I'm not sure how much their price target is really going to matter, honestly, because like we just have to think about what's incrementally positive, and everybody knows that ARC is bullish. So if they came out with 8K or 10K, I'm not sure. I'm not really sure the stock would do anything. Now, if it came out with new information, like they learned something new, they got some new data, there were developments that were concrete and not known by the public or by the market, and they were really able to share some insight on that level, it could get the stock moving. But I don't think like a recut of their model and a corresponding price increase would really get people that excited, even if it's a big number. Tesla stock is definitely ignoring the corona. If my, oh, it looks like my, let's see. Yeah, as of 601, up 11 and a half at 647.80. Just crazy. So back to FSD for a second. Based on the comments in the core technology section of the earnings release, it's kind of hard to tell if if Tesla's really gonna have a big, huge material update that's gonna get us excited about something in the very near term. But that's okay. Let's see what he says, and maybe they are saving something. And again, lots of people have pointed this out, myself included. There's nothing in the estimates for robotaxi right now anyway. So even if they don't say anything about it, quite frankly, even if it never comes ever, and I think that's a horrible assumption, but even if it never comes, stock can still go up. So I'm going to try to do a little bit of finagling right now and test to see if we can get the audio. So I'm going to try this again, and let's see. Tesla CNBC. Oh, this is a great clip. Kramer. Let's see what Kramer has to say. This was yesterday, and I watched this video before I published my video, and Kramer made me a little bit scared because he made me think like, I might be wrong, and I might still be wrong, but the point from my video was I'm holding long and strong into earnings, and I think EPS and earnings estimates for 2020 will be revised materially upwards after the report, and that happened. So anyway, let's give this a try and see if you can hear Kramer. Can anyone hear that? Dang. Okay. Test number 2 failed. Ha, man, Kramer's need to up the audio. I'm using OBS. I don't know if other people use that. Audio input capture. Yeah, somebody said change the default device. The problem is I have a whole sound and mixing board, which everything is going through. Oh, that's annoying. Hey, sorry everybody. I just tried to test something to see if I could get the video sound working. Oh, we're losing it. Somebody said we're losing it. I am sorry about that. Okay. That should be done. If somebody hears me twice, you should be not hearing that in a minute. Boy, people are dropping like flies. That was not good. I'm sorry about that. People are bailing left and right. Apologies. So what I'm going to do is probably put the conference call on and then just microphone it. Yeah, to the people who are saying there's an odd echo, that will end in a second. I turned on 2 microphones by accident. I am sorry. I'm not a professional. Cool. People are still here. Thank you, CJ. I appreciate it. So what I will do is just put the conference call up and just mic it, and that'll work fine. And there will be a little bit of a lag on my channel. So let's check in with CNBC and see what they're talking about. I can only imagine. I mean, there's Facebook and you know what? Let's check in around the world. Let's do a little around the world in 90 seconds here and just see. By the way, so since I've been talking, Tesla stock has jumped another 1%. It's now over 650 to 652.20, and it's up $71 per share on the day. So there's something. I think Whitney Tilson said in the middle of this year his price target was 100, so he's off by, I can tell him exactly how much he's off by, at least as of right now, $552.77. And the 77 cents, every penny makes a difference. So he's off by that much, at least as of right now. But you know what? Everybody's been wrong before. It's not easy to make money in stocks. And I think a lot of people here, myself included, we're just lucky that we saw an interesting opportunity. We saw a CEO trying to do something big. We saw a market not giving him respect, and we kind of bet on Elon and on the company and on the mission. And again, the mission is to basically improve the odds of humans remaining on this planet and in the universe as a viable species. One of the ways is by populating another planet. So I feel like that's a pretty good mission to have. It's a growth industry until every single person lives forever. Hopefully we all do live forever. Maybe we will be. Maybe we'll be the first generation that all lives forever. But anyway, until that happens, he's definitely in a growth industry, and he's making stuff happen. He just gets stuff done. He works with the government in SpaceX. There's an awesome story. I'm going off on a little bit of a tangent right now, but there's an awesome story about the time that he decided He wanted to commercial excuse me, he wanted to commercialize space travel. And the reason why he wanted to do it is because he thought, well, if I can make money with sending commercial rockets up, basically to launch satellites and things like that, if I can make enough money doing that, then I can fund a mission to Mars. And in funding the mission to Mars, I'll learn how to build a rocket. And so I think the budget for NASA peaked around 1969, which is when we put our man on the moon. I think that's the last time we did it. And he was hunting around, and it basically turned out that in the US we didn't have the technological capability in terms of rockets and things like that to even put together the equipment to allow him to do commercially what he wanted to do. So he had to go all the way to Russia, and he was going to buy a missile from Russia for, like, I think it was $18 million or something like that, so he could get started with his first rocket. And it was an ICBM, an intercontinental ballistic missile. And I think he had sold PayPal by this point, so he had a little bit of money, but like that was going to take up a significant portion of his net worth. And so he was thinking, like, I don't know, that's a lot of money to spend on one rocket and one missile, and, like, what if it blows up? And oh, somebody said I wish I did not short. Yeah, that's okay though. Hey, you know what? There's still time to change your mind. Like, that's another big thing is, like, don't compound one mistake by making more mistakes. Like, just because you were short the stock, or even just because you didn't go long it, it doesn't mean that tomorrow doesn't give you a new opportunity to make the right decision. Like, don't punish yourself just because you made one decision that you weren't happy about. But anyway, he went to Russia and he wanted to buy this ICBM, and it was like several $1 million, and he didn't want to buy it. And so he started adding up just the raw materials of everything that was in the rocket, the metals and everything. And I think he determined that it was like 2 or 3% of the cost of the rocket was actually in the raw materials, and the rest of it was just building it and engineering it. And so he thought, okay, well, I'll just get the raw materials and, like, build a rocket. So that's what he did, and that's how he started SpaceX. And the goal of SpaceX is to make money by commercializing space travel, so that he can get enough money to fund a mission to Mars. Pretty insane. So the point is like, I don't know if this guy wants to build a little car, on the side, and we're all rolling around in these Mars rovers, which is now the Cybertruck. Like, we get the benefit of the byproduct of his mission, and we get to participate as some of us. Uh, some of us are a lot large. There's some people in this chat that are huge. We added up the share count earlier. I think we have at least like $5 million worth of shareholders in here. But anyway, if we get to invest in this Tesla startup in a way, because they have so many businesses and so many of them are early on the adoption curve, that it's pretty exciting. Julia says, I wish you could buy shares in SpaceX. Yeah. Somebody says, I know someone who bought 10,000 shares of Tesla 6 years ago and they still have them. Hot damn. Who's that? So they're sitting on, let's see, 10,000 at 654. Oh, it's only 6.5 million. Not bad. Somebody says, can you give that person my phone number? Yeah, my thinking too. Somebody here got four $800 calls. Tell us how you did, Sammy. So Sammy is telling us about purchasing calls. Easy 6K. Hey, well done. And somebody said Elon didn't want to IPO SpaceX because he doesn't want to lose control. Yeah, you know what? It's funny. Earlier I said any short right now would be begging to have the company be taken private, to have Tesla be taken private at 420 a share. Pretty funny. What a difference a year makes, or a year and a little bit. Somebody says I need a Tesla here in Germany. Yeah, Christoph, tell us what is going on in Berlin. Like, what? How do people feel about Tesla? I don't know if you're in Berlin or not, but number one, thanks for joining and commenting. And number two, like, I don't know, tell us the people that are around the world and looking at Gigafactory 4. And we read stuff about, protesters, but we also read that you're going to have a huge amount of capacity there. How do people feel? Somebody says, I haven't seen this much hype over a stock in a while. I think that's true. I think on the other hand, though, I haven't seen as much negativity around a stock as I did maybe over the last couple of years with Tesla for a company that had such a bright future. Just my opinion. Good night, Oliver. Thanks for sticking with me, man. Really appreciate it. Have an enjoyable evening. Yeah, so some people don't want Gigafactory 4. Well, if they're really green, then I don't know. Don't they believe in the future? Don't they believe in sustainability? Um, so, for those of you who are just tuning in, I was actually going to switch back over to CNBC real quick, and I was also going to go through a couple of the other names that reported, like Facebook. Although, does anybody care about Facebook even? Does anybody even care to go through the other names? Let me know. Um, let's tune into CNBC and see what our friends are talking about. Oh, it's going to be hard to do. I got to put this little TV on the internet. Bear with me a second. While I'm doing that, yeah, somebody says Facebook is so 2000s. Hey, that's true. In a way, hey, but they made some pretty good acquisitions. They bought Instagram. I know people who use that, and WhatsApp. Um, so let's see. Facebook is MySpace now, just like eBay to Amazon. I will tell you this, I don't use it. So, yeah, there may be something to that. But they do have other valuable businesses. I think a lot of people use Instagram. And who knows? I don't think anybody cares what I have to say about Facebook. And they shouldn't. Um, my TV is. Okay, here we go. I'm going to tune you guys into CNBC. Wow. After I give you a massive cough into the microphone, I'm still getting my professional broadcasting chops here, trying to make things better. I've actually invested a lot in like equipment and things to try to make the picture better and the sound better. So I think everything's going to keep getting better and better and better. If you stick with me and you subscribe, there's going to, like, this is really just the beginning. Like right now, we're just looking at stuff on a computer screen. And I have a lot more planned, a lot of crazy things actually planned that maybe I shouldn't do. But I think they'll be entertaining for people. And I think people will like watching that stuff. And this is the goal to entertain people and maybe improve their lives a tiny little bit. Does that sound dumb to say? Probably. Sorry. I'm just looking for CNBC. It's the only thing that comes up typically. And when I'm looking for it now, I can't find it. MSNBC. All right, I'm going to try typing it in. CNBC Live. Oh, Kramer's on. He's talking about Shopify.
Now, while we're on the subject of Kansas City, they also have another terrific wide receiver. That's Sammy Watkins.
Yeah, you know what? I don't want to see Kramer talk about Shopify. So I'm not going to do that. Anyone know if Ricky Gutierrez got Tesla stock? I also follow Warrior Trader. I don't know. I have seen that Ricky has posted about Tesla, but I'm not up on what he's doing. I thought he traded more commodities and things like that. So I'm not really sure. I'm not up on what he's doing. And by the way, to anybody who hasn't subscribed yet, please do that. Speaking of Ricky, because Ricky has got a lot of subs. So I just feel like if you're watching me and Ricky, and you're already subscribed to him, go subscribe to him first. But if you've done that, give me a little love. Guitar Res, yeah, exactly. I don't know how to pronounce it. I may be butchering his name. Let's do an update. So Tesla's hanging in at 12%. So the conference call is coming up in 10 minutes. So I'll log us into that and we can listen. Thank you, Damon. I appreciate it. I think you're literally the first person that has said, "Hey, I subbed." So I appreciate it so much. And by the way, I mean you already know that you can do. You already know that you can do this, good sir. But if I get annoying, just go ahead and you can block me forever. But I appreciate the sub. I really, really appreciate everybody watching all of the videos. I think you can hear that and feel it when I put the effort into those other videos. But every time I say that I appreciate people watching, I do mean it, and that especially includes right now. So Daniel says, "What are people's thoughts on buying into lithium companies? With all the EVs, I think it could push demand higher. I'm already subbed." First of all, thank you. Yeah, so you know what? That's a great question. I am going to try to line somebody up. I'm actually going to write it down right now. I have a pad here of ideas, and I've been thinking about lining somebody up. Thank you. Tell me how to pronounce your name, but it looks like Bin Siong. And H, thank you guys so, so much. CJ says, "This is an amazing day." You're right. This kind of doesn't feel real. This is really surreal. Like, I feel like, I don't know, on some level, the past few weeks have moved so slowly, almost in anticipation. There's been so much like momentum and energy and expectation building into this event that it still does not, it doesn't seem real yet to me. I don't know why. I mean, it is just a conference call after all. They have 4 of these a year, and they're going to have a battery day. And, you know, Elon went on the Third Row podcast. He's been, I think, maybe a little bit more active on media recently. He's been extremely active on Twitter. So it's not like we never hear from the company. It's just, I don't know, this moment. This is I think what I'm trying to say is this just feels like a special time in history right now. It really does. Like, this is a historic moment. What Tesla has been able to overcome with the help of shareholders and people like us, and I don't know, just everybody, customers, of course, just the collective will of the planet. God, that sounds insane, but the collective will of the planet to move towards a more sustainable future and all that stuff. It just feels like people are pulling for the company finally, and that's great. Anyway, so the question was about nickel. I got off topic. Actually, lithium. I'm going to ask somebody I know who knows a lot about the metals, and maybe he will help us. I don't know enough, and commodities are tricky. So, lithium, cobalt, and nickel. And if you guys weren't here earlier, I talked about how the comments and everything in the description continues to let me know that everybody who watches is like way, way smarter than me, and they have far better ideas. It's just that they have better things to do than make YouTube videos. So it is cool to read all of the comments because I don't know, everybody has good insight. Eden says, "What do I think about Microsoft?" I'll give you my answer. I think they've improved a lot. I want to read the book by the CEO before I make any comments because I want to see. The reason for that is I want to see how long, how far along he is in his journey to kind of transform the company. I think they're a good company, but that doesn't help you with the stock. Let's see where Microsoft is in terms of its multiple. What does everybody think it is? I think if it's over 30, maybe it's expensive. But that's just me talking completely out of thin air because I'm not informed enough to really give you my thoughts. But the stock's at 168, and analysts expect the company to do, let's just say 2021. I guess they're in 2020. I don't know. What fiscal year are they in? Well, March 2020, current quarter. I'm a little confused. They must have like a fiscal year something or other going on. I'm just going to average these next two numbers. So 540 and let's just call it like 570. So the stock's at 168 over 570. It's trading at 29 and a half. I said if it was over 30, it was expensive. So I guess it's cheap, but I don't know. I need to look at it. Windows 10 is a huge improvement over all of the previous versions of Windows, and I like how they're sort of changing the company to make it a lot more user friendly. And there's just a lot of things you can do on a PC that you can't do on a Mac. I'm on a Mac right now, which I love. Tesla stock split, would that happen? I've actually responded to comments about that question. I don't think it's likely in the near term because now, by the way, though, I would just Google if anybody's interested in Tesla stock splits. If it's for reasons other than just like pumping the stock temporarily, which it would probably do, at least temporarily. But if you're interested in that, in the answer to that question because you want to buy in and you don't want to buy, you know, a whatever $650 share, look at fractional shares. Just Google that, and I know that there are services. I believe Robinhood is one. That there are services that will allow you to buy a fractional share. So you can do that. Tesla's at 650. Brian says Africa needs a gigafactory. Oh, cool. And thank you, Dennis, who says that 2-Bit Da Vinci has a series on it. I will watch it, but if I'm going to do one, well, let me watch it before I pass judgment. I was just going to say I'd like to give you guys my own thoughts. Somebody said, when's the call starting? Good question. In about 4 minutes from now. So let me see if I can't log in to this thing. And I'm going to just mic it. So let me know in the comments once I pot it up. I think that's the professional term, if you can hear it. All right, so we got a webcast. By the way, if anybody goes to say, you can submit questions for the earnings call. I've read that you have to confirm the fact that you're a shareholder, but maybe not. Okay, so. And for anybody just tuning in, I'm just logging into the webcast right now so we can all get on it. So just bear with me. Okay. 1 second. By the way, thank you so much for everybody who's decided to spend the earnings release over here. I know there's like literally hundreds of channels that are probably covering this in addition to CNBC and Reddit, and there's lots of great places to go. So thank you so much for spending a little bit of your time here. I'm having fun. I hope you guys are. So I'll probably do something like this. And that's the conference call music. So I'll just monitor. I'll just monitor the music so we don't miss anything. And the minute they start talking, hey, thank you. And yes, 00. I think it's 0000. I really appreciate all of your comments and everything you contribute. And and thank you for saying that. I know that you're active. Somebody says, is the stock going down tomorrow? You know, it's a fair question. Why not ask that question? Based on everything I saw, so somebody says it will go down a bit. Profit takers, maybe. But just focusing on the fundamentals, the only one sort of aspect I saw to this that really gives me would really cause me to want to follow up with the company a little bit just has to do with the fact that they said production will outpace deliveries. And it just makes you think about, like, why is there a mismatch there? Like, if there's big demand, then why would they be producing more than they're delivering? I would just want to know what the answer to that question is. And I suspect analysts will be all over that. To me, that's the key question. Everything else, to me, in my personal opinion, looked great. You had a beat in the fourth quarter on the top and bottom line. You had revenue guidance in terms of their outlook, and they really just do production guidance, and then solar and the other businesses growth. So you kind of have to back into your own estimates about what that means for numbers. But when I ran a back of the envelope, I got numbers that are higher than consensus, and when consensus numbers go up, that's usually good. Daniel says, anyone else tempted to plow their emergency funds into Tesla? I know that in theory it's a terrible idea, but yeah, I can't help you there. I don't know. Not qualified to give advice like that. But don't do anything that don't make any moves where you get into a situation where you can't afford to lose. And 00 says, price is at 650. I'm so sick to my stomach. I literally can't believe this right now. So surreal. What a great moment for everyone here. I am buying everyone a beer tonight. Likewise, I will too. I will too for anybody here. I was talking earlier about, I don't know if you were here for this. Here it is, guys.
Please continue to stand by. Thank you for your patience.
Just let me know if you heard that so I can know if the sound is good enough, and if it's not, I'll make some adjustments. Yeah, somebody said I want to go home now. Yeah, guys, definitely go home or do whatever you want to do. I mean, you can read the transcript anytime. Somebody let me know if they could just hear that little test, though. Okay, thank you. Thank you, guys. It was a little quiet. Yeah, okay. Yep. All right, I'll pump the volume up when they go live. 15%. Yeah. Anyway, this day and honestly the last few weeks have really felt surreal. This is like a day of reckoning. I guess that statement kind of has a negative connotation to it, but it's a day of reckoning in the sense that, like, there's just been such a battle going on between what I describe as the people who get it and the people that don't. And here we go. So 1 second.
At this time, all participants are on a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference is being recorded. If you require any further assistance, please press star 0.
I'm going to make this a little bit better.
Conference over to your speaker, Mr. Martin Viejo, Senior Director of Investor Relations. Please go ahead, sir.
Thank you, Sherry, and good afternoon, everyone. And welcome to Tesla's fourth quarter 2019 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q4 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During the call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press star 1 now if you'd like to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So Q4 was another strong quarter for the company. Deliveries reached over 112,000 vehicles in a single quarter. It's hard to think of a similar product with such strong demand that it can generate more than $20 billion in revenue with zero advertising spend. I think we do say that from time to time, and I think it's often overlooked, but to have the highest demand electric vehicle in the world with no advertising spend is, I think, quite remarkable, and speaks to the nature of the product and the fact that the product itself is compelling enough to generate that demand without a bunch of advertising. At our Fremont factory, we were producing at a rate roughly the same as the Newey factory did in its record year of 2006, and obviously we expect to exceed that significantly this year. This rate of production was achieved before we even started to produce the Model Y out of Fremont, so there's a lot of potential to go beyond that number. For the Shanghai factory, I'd like to say congratulations again to the team in Shanghai on launching Model 3 last quarter and achieving their first deliveries earlier this year. I'm really excited and optimistic about the potential for the Shanghai factory. I think it's going to be an incredible asset to the company. And we also broke ground on the Model Y factory in Shanghai, so a lot of good progress there. Regarding Model Y, it was only 10 months ago that we revealed a Model Y prototype, and now in January this year, we started producing Model Y in limited volumes already. This is thanks to a great effort of our engineering team, and we managed to achieve by far the highest energy efficiency of any electric SUV ever produced at 4.1 miles per kilowatt hour, which means Model Y all-wheel drive got an EPA rating of 315 miles. This improvement is reflected on the configurator as of today. This is above what we previously stated by a pretty significant margin. And just with great acceleration, top speed, it's really just incredible specs all around. For the Cybertruck, a few months ago we revealed the Cybertruck, and that went viral. And we tried to build a product that is superior in every way without any preconceptions of how such a product should look. So it really just, from the standpoint of what's the most badass, futuristic, armored personnel carrier that, kicks the ass of any pickup truck, basically, that's the goal. We wanted it to look like something that just came out of a sci-fi movie set from the future. And the demand has been incredible. I've never seen actually such a level of demand at this. We've never seen anything like it, basically. I think we will make about as many as we can sell for many years. So we'll sell as many as we can make. It's going to be pretty nuts. And I think actually the product is better than people realize even. They don't even have enough information to realize just the awesomeness of it. It's just great. So, and then stepping back in 2018, from a financial standpoint, we were free cash flow was break even. But in 2019, we managed to generate more than $1 billion free cash flow while building a factory in Shanghai in record time and while building parts of Model Y production. So I think for us to have this level of free cash flow while making massive investments in capacity, while developing new products, while improving the core engineering is a testament to the, I think, incredible performance of the Tesla team, and I'm just so proud to work with such a great team. I'd like to thank the whole Tesla team for their ongoing work on cost control, is what has allowed us to get to these compelling financial numbers while at the same time growing the company at an incredible pace. And in conclusion, when I think of what we have in front of us the next couple of years, we've got Model Y, we've got Giga Berlin, Tesla Semi, solar glass roof, Cybertruck, some very exciting improvements in back battery technology, we've got full self-driving, got the next-gen Roadster, and probably get a bunch of other products we'll come up with too. It's hard to think of another company that has a more exciting product and technology roadmap. So, super fired up about where Tesla will be, in the next 10 years. If you look back 10 years from today to 2010, we will produce approximately 1,000 times more cars in 2020 than we produced in 2010. 8,000. And we have also solar glass and solar retrofit and Powerwall, Power Pack, all those other things too. So, where will we be in 10 years? Very exciting to consider the prospect.
Thank you very much, Elon. And Zach has some opening remarks as well.
Yeah, thanks, Martin. This past year was truly transformational for Tesla, and I want to thank everyone who's been a part of making this happen. On 2019, a few key points I'd like to highlight. On demand, while we've mentioned this a few times, it's worth highlighting once again. Over the course of the year, we've transitioned entirely from generating Model 3 orders from a reservation backlog to generating new and organic demand. We've also seen a stabilization of Model 3 ASPs, even increasing slightly in Q4. And we've seen an increase in ASPs of S and X after the launch of the longer-range versions in Q2. With respect to capacity expansion, we've greatly learned from the development and launch of Model 3 in Fremont and Reno. As a result, we've been able to bring new production capacity on board faster and with less cost. This is evidenced by the launch of Model 3 in Shanghai as well as Model Y in Fremont, programs that were both launched in under 1 year. Financially, we have demonstrated multiple quarters of strong cash generation, enabled through higher volumes, improvements to capital efficiency, progress on working capital management, and continued improvement in our product and operational costs. And we were able to achieve positive GAAP net income in both Q3 and Q4 for many of the same reasons that enabled strong cash generation. We've also made progress on recurring and software-based revenue with the implementation of premium connectivity and the beginning of upgrades available for purchase via the Tesla mobile app. Finally, on stock-based compensation, it increased sequentially by $82 million, driven almost entirely by an expense related to the next tranche of the CEO grant. This is a result of our improved expected financial performance of the company, which the CEO stock grant is tied to. As we look ahead to 2020, this again will be an important year for the company. Our task ahead is to execute on the next phase of growth while managing cash flows to support that growth. On Model Y, we expect first deliveries in limited quantities later this quarter and will ramp over subsequent quarters. As mentioned previously, we are forecasting higher gross margins on Model Y compared to the Model 3. This year, for the Shanghai-built Model 3, we expect to achieve run rate production and delivery rates. In addition, we expect to have completed the majority of planned supply chain localization at the factory or in the region. This is one of the most important components to achieve lower production costs for the site. We are also seeing strong order rates for the locally built Model 3 and remain focused on continuing the production ramp and managing costs. We also anticipate significant progress on factory construction of the Shanghai and Berlin-built Model Y, which will result in continued increases in capital spending. On operating expenses, I expect an increase over the course of the year to support our growing product pipeline and international footprint. However, OPEX growth should increase at a lower rate than top-line revenue. Overall, we believe this will set us up for our strongest annual financial performance yet, with sufficient forecasted cash flows to support investments related to our growth and further strengthening of our balance sheet. For Q1, please keep in mind that the industry is always impacted by seasonality. Additionally, we are in the process of ramping two major products, Model 3 in Shanghai and Model Y in Fremont, which I expect will temporarily weigh on our margins. We are also in the early stages of understanding if and to what extent we may be temporarily impacted by the coronavirus. At this point, we're expecting a 1 to 1.5 week delay in the ramp of Shanghai-built Model 3 due to a government-required factory shutdown. This may slightly impact profitability for the quarter, but is limited as the profit contribution from Model 3 Shanghai remains in the early stages. We are also closely monitoring whether there will be interruptions in the supply chain for cars built in Fremont. So far, we're not aware of anything material, but it's important to caveat that this is an evolving story. However, we have more than sufficient cash to continue our expansion plans while further strengthening the balance sheet. Thank you again for your support, and we will turn to questions.
Thank you. We are going to take the first questions from retail investors compiled by Say Technologies. So the first retail investor question is, since solar is required for all new home constructions in California, do you have any substantial orders for solar glass roofs from any of the large California home builders that you can share? What's the 2020 target for the number of solar glass roof installations in California?
Well, I think we are seeing from a small base exponential growth in demand and output for solar glass roof. So it's difficult to predict what the number will be this year, except that the demand is very strong, and we are working also not just through Tesla installers, but also through new home builders and through just the roofing industry in general, where there's in North America on the order of 4 million new roofs per year. So we see a lot of interest, and so it's just a question of refining the installation process, getting lots of crews trained to do the installation. But over time, I would.
Guys, I don't know what just happened. I'm going to try to refresh, but I don't think it was on my end. I still have a connection. Not sure if the call just cut out.
So
here we go. We're back.
Product, but because it is a new and quite revolutionary product, and there's a lot of challenges to overcome, but they will be overcome, and this will be a major product line of Tesla. And the Buffalo factory is doing great. So, yeah.
Thank you. Second question from retail shareholders is, will you release the Tesla ride-hailing network app before full autonomy and change the terms of Tesla insurance to allow owners to be drivers on the network? If so, when will this happen? Might want to target California airports first. Also a good place to add superchargers.
Sorry, it sounds like one question in one.
Yeah, it's a bit of a bundle, yeah.
Well, I think that it probably will make sense to have to enable car sharing in advance of the kind of sort of giant robotaxi fleet, because the car sharing can be done before full self-driving is approved by regulators. So it's probably something that we would enable before the full sort of robotaxi fleet is enabled. It sounds like there were some other questions bundled in there.
Superchargers at airports?
Oh, sure. Yeah, probably we'll have superchargers at airports. We'll have superchargers wherever we see that there is a need for superchargers.
And then on the insurance part of the question, it is our intent to allow people to put their cars into ride-sharing or the FSD network using Tesla insurance.
Yeah.
That's not currently the case, but by the time that this is available, it's our intent to get that ready.
Okay, thank you. The next question from retail investors is, how many California owners are currently insured with Tesla insurance? What's the target for Tesla insurance in 2020? When will you start to significantly leverage the data you have from the fleet to lower the cost of your coverage? Will we get premium discount of certain percent?
Yeah, go ahead. Sorry.
Yeah, so Tesla insurance is currently available in California. A couple of things that we're working on this front. The first is to expand it to other locations, and we're preparing the regulatory processes, preparing our processes to go through the regulatory processes in those locations. We're also working on the processes to continue to adjust our rates in California, which also have to go through regulatory processes, as insurance is quite heavily regulated. And that's where we're spending our time focusing on Tesla insurance right now. There's a significant amount of innovation, as we've discussed before, in this space, exactly getting to the intent of what the question here is, using our technology to reduce rates, and this will be rolled in over time.
So the last part of the question was, will there be a discount for using autopilot with our cars?
Oh, yeah, there will be.
Yeah, the rate card for California Tesla insurance already considers the safety features associated with autopilot.
Right, but I think it would make sense for us to close the loop on higher use of autopilot so it reduces the insurance costs. It lowers the probability of injury. So I think insurance is going to be, I think, quite a major product of Tesla over time. The amount of money that people spend on car insurance is like a remarkably big percentage of the cost of a car. Like you can lease a Model 3 right now for $400 a month, but a typical owner in California will be paying, it's somewhere between $100 and $200 a month in insurance. So we're talking about something which is maybe a quarter to half of the cost of the lease of the car is insurance. And a lot of that insurance cost is just because the insurance companies don't have good information about the drivers. And that there's no good way to provide feedback where, it's a very poor feedback mechanism in terms of the insurance rates versus the actual way that the car is being driven, whereas we can do that in real time. It's a fundamental information advantage that the insurance companies don't have.
Thank you. The next question is, you set expectations that you would be feature complete on FSD by the end of 2019. Can you please provide an update on when will we see this with end users? Where are you in retrofitting the FSD computer to older models?
Well, I mean, to be precise, I said I was hoping it would be feature complete with full FSD by the end of last year. We got pretty close. It's looking like we might be feature complete in a few months. But feature complete just means like it has some chance of going from your home to work, let's say, with no interventions. So it doesn't mean the features are working well. It means it has a above zero chance. So I think that's looking like maybe it's going to be a couple months from now. What isn't obvious regarding autopilot and full self-driving is just how much work has been going into improving the foundational elements of autonomy. The core autopilot and Tesla autopilot software and AI team is I think very, very strong and making great progress. We're really only beginning to take full advantage of the autopilot hardware, the FSD hardware. So I think the apparent progress as seen by consumers will seem to be extremely rapid, but actually what's really got on my head seems like I said is having the foundational software be very strong, having a really strong foundation. And then a really fundamental thing is moving to video training. So in terms of labeling with video and all 8 cameras simultaneously. This is a really, in terms of labeling efficiency, arguably like a 3 order of magnitude improvement in labeling efficiency. For those who know about this, it's extremely fundamental. So that's making great progress on that.
Thank you. And the last retail investor question comes from Kendall. Since most retail investors seem to understand Tesla better than analysts and are risking a larger part of their own personal wealth on Tesla, doesn't it make sense to take mostly questions on these earnings calls from us via Say? Do you even have to take questions, answer questions from analysts?
Well, I guess we don't have to. I do think that a lot of retail investors actually have deeper and more accurate insights than many of the big institutional investors, and certainly better insights than many of the analysts. It seems like if people really looked at some of the smart retail investor analysts, what some of the smaller retail investors predicted about the future of Tesla, you'd probably get the highest accuracy and remarkable insight from some of those predictions.
Okay. So now let's switch to institutional shareholder questions. The number one question is, you have spoken previously about Shanghai Giga being 65% lower capex per unit of capacity. Have you learned to do anything better or differently from an OPEX perspective? And if yes, what kind of impact might we expect on the long-term gross margin?
Sure, go ahead.
Yeah, the Shanghai factory has been a quite remarkable cost experience across all line items of COGS for the Model 3 there. We have talked a lot about the capex per unit of capacity being lower, but I mean, you can basically run down the entire list of COGS between labor cost, material cost due to localization, so it's opening up suppliers that would not have made economic sense from the States. Localizing the supply chain flows into inbound logistics and outbound logistics costs as well, so we're not shipping cars from California over to China. And then that has a corresponding savings on our lower import-related costs. And there's a slide in the shareholder letter that shows a layout comparison between our Fremont facility here in California and also the Model 3 factory in China. And the simplification in terms of the flow is pretty evident from that layout. And that cascades itself into all sorts of savings for the operations of the facility. And so, if you add all of this up, our internal estimates are a pretty significant reduction in the cost of Model 3 in China relative to Fremont. But I think it's also important to keep in mind that the cost of the Standard Plus that we're selling out of Shanghai is also lower than that of the similar car coming out of Fremont from a price perspective. And so, and I've said this on previous earnings calls, I think it's fair to expect the margin coming out of the Shanghai facility to match the same margin for the vehicle in Fremont.
Yeah, I think there's a pretty big fundamental efficiency gain that Tesla has by just making cars, especially the affordable cars, the 3 and the Y, at least on the continent where the customers are. It kind of makes sense. It's like what we're doing, or have been doing in the past, was really pretty silly in making cars in California and then shipping them halfway around the world to Asia and Europe. And this created a lot of costs because you got to ship those cars, so you got a lot of finished goods sitting on the water or waiting at the port or going through customs. You got tariffs, transport. And then the factory complexity in California is very high because you've got different regulatory requirements in China, North America, and Europe. So there are 3 different types of cars that are being built. It's very complex. And just having a factory in China, a factory in California, a factory in China, a factory in North America, a factory in Europe, just that alone is a massive improvement in our fundamental operating efficiency that I think may not be fully appreciated.
And also on working capital.
Yeah, absolutely.
We're reducing OPEX here too. Not only in China.
Okay, the next question from institutional investors is, given the recent run in the share price, why not raise capital now and substantially accelerate the growth in production, i.e. build the gigafactories, investment in supercharger and customer service?
Well, we're actually spending money as quickly as we can spend it sensibly. So if there's any sensible way to spend money, we are spending it. There's no artificial holdback on expenditures. Anything that I see that is looks like it's got good value for money? The answer is yes, immediately. So, like we're spending money, I think, efficiently, and we're not artificially limiting our progress. And then, despite all that, we are still generating positive cash. So, in light of that, it doesn't make sense to raise money because we expect to generate cash despite this growth level. Back exactly.
I completely agree with that. I think some of our learnings during the Model 3 launch period where we grew too quickly and with too much complexity, and it held back our ability to continue to scale. And part of the journey that we've been on in 2019 is to unwind a series of unintentional bad processes that kind of accumulated in the company over time. And so that's kind of what contributes to the reduction in OPEX over the years as we get smarter about that. And now we've laid a good foundation, I think, and I agree with Elon that we're not holding back on the growth. I mean, we have two vehicle products launching right now, and that will consume much of the bandwidth of the company to stabilize those over the course of the year. And then looking into next year, we have even more products launching, more factories.
Yeah.
And so we want to be smart about how we spend money and grow in a way that's sustainable, so we don't fall victim to the mistakes I think we made a year and a half or so ago.
Yeah, absolutely.
Okay, the next question we've already answered regarding autopilot timelines. So the following question would be, can we please talk about cost control and OPEX sustainability in terms of growth versus gross profit growth? How did we achieve the recent OPEX trends, and how should we think about OPEX needs as we grow both vehicles and geographic workloads?
Yeah, I commented briefly on this in my opening remarks. We did see an increase in operating expenses from Q3 to Q4, even excluding the portion of that attributed to stock-based compensation. And when you double-click into that growth, it's supporting the Model Y program and also Shanghai program as well. And so I think we, as a company, are now at the point where we've learned a lot on cost efficiency, as I've just mentioned, and we've unwound a number of the processes that were not in the right place, including automating the things that need to be automated. And we'll continue on that journey, but I think we're at a point now where OPEX will start to tick up, at least if you look annually from 2019 to 2020, to support our international footprint and then the growth of the company. Our job is to grow that significantly slower than the pace of growth of revenue to improve the operating leverage, which we're very, very focused on.
Okay, and the last question from investors is, the sales of Model S and X have stayed flat for several quarters. The main reason is that they still use 18650 batteries. When will S and X use 2170 batteries? Manufacturing capacity of 18650 may be used for battery storage systems instead.
Sure. Well, actually, the core chemistry inside the 18650 cell has improved many times over the years. So it's really just a form factor as opposed to a core technology. So it's, I think we're pretty happy with where where the energy content of the cell and the improvements in efficiency of the vehicle. We're rapidly approaching a 400-mile range for the Model S, for example. So this is it won't be long before Model S has a 400-mile range. Drew, is there anything you want to add?
No, other than to say that the 18650 lines, have been running smoothly for a really long time, and in a world where cell supply is fueling growth, or part of the fuel of growth, I don't see a reason to turn that cell supply off. So.
Yeah. And actually, the Model S and X actually have more range than we're currently stating on the website. We just haven't gotten around to updating the EPA certified number. But the actual range of the Model S and X are above what the website says there are.
That's true.
the existing cars that are so they're being made.
It's actually been that way for
So that
a long time.
Yeah. I think it must have been somewhere in the 380s or something like that. Yeah.
Thank you very much. And Cherie, let's go to the Q&A on the phone.
Thank you. Again, ladies and gentlemen, to ask a question, please press star 1, and we ask that you please limit yourself to one question and one follow-up. Our first question comes from Adam Jonas with Morgan Stanley.
Hi, everybody. And I actually agree that I think the retail questions were excellent, actually. So, Elon, do you see potential for Tesla vehicles to be fitted with user terminals that are compatible with the Starlink constellation in the near or medium-term future?
It's certainly something that could happen in coming years. There's no plans to do it this year. The focus of Starlink is really for high bandwidth, low latency connectivity for homes and businesses and I guess aircraft and boats and that kind of thing. But the antenna for that high bandwidth, low latency thing is sort of about the size of a medium pizza, which you could put on a car, but I think is more bandwidth than you would really need. I mean, technically, you could buy one and just stick it on the car. Yeah, it'll work. Phased array antenna.
But maybe just as a follow-up, for my follow-up, how would, assuming that we get the antenna form factor and cost down to a point where that could be integrated into the roof of a car, for example, cost effectively and aerodynamically, et cetera, how would compatibility with a Starlink architecture theoretically improve the Tesla customer experience or the capability of the network?
I think actually in most parts of the world we just use the cellular connectivity, just use 5G. It would be the recommendation, certainly in like any cities or something like that, But if you're out in the countryside and there's not good cell connectivity, then you could connect with a Starlink antenna. And you wouldn't need, you don't need to have gigabit level connectivity. You could probably 20, 30 megabits is probably fine. And then you can have a much smaller antenna. So I guess it could be good for making sure there's connectivity and outside of major cities and that kind of thing. But I mean that's I'm sort of I'd say relatively obtuse. It's not I'm not thinking about it very much, to be honest.
Thank you. Let's go to the next question.
Thank you. Our next question comes from Dan Gals with Wolfe Research.
Hey, good afternoon. Thanks. So hoping you could give us some guidance on what CapEx is going to be this year and kind of as I look to model out the business long term, is there a rule of thumb that we can use for capital expenditures per unit of production capacity or some sort of rule of thumb like that?
I don't think we want to tell you. I don't think we want to say what our capex is going to be this year. Necessarily. Except to say that, like as I said earlier, we're spending money as fast as we can spend money in sensible ways. So it's definitely not artificially limited. And we will spend a lot of money this year for sure. The challenge comes in finding efficient ways to actually deploy the capital. That's the harder part than sort of deciding on a capex number, really.
And I think we'll always find ways to become more capex efficient per unit of capacity.
Yes.
And we will challenge the teams to always become more efficient. And so we see a reduction per unit in terms of capex.
Absolutely.
It's definitely the right metric.
Yeah, it's good. Yeah, I think that there's so much in Tesla where the core technology is improving radically that maybe you wouldn't necessarily notice as an end customer. Or some of them where you'd notice, some you wouldn't. But it's just there are these things that have a big effect on the efficiency of the company. Like our internal applications team that kind of builds the Tesla internal operating system. And improves sort of core automation of the company. That makes a big difference to our productivity. But you wouldn't necessarily, you would see it effectively in healthier financials, but you wouldn't necessarily notice it as an end customer.
Okay, got it. Maybe I could follow up. I mean, your kind of operating cash flow EBITDA is annualizing at $4.5 billion right now. As I look out to the future, I'm kind of guessing that could fund somewhere around 200 to 250,000 units of capacity a year, which would be maybe a 30% CAGR over 5 years. I mean, is that something that's feasible for you guys to execute on a consistent basis? A level of capacity building that large?
I think
we're heading for more than 30%.
Yeah, I think the math. I'm not sure the math that you've done, but I think our internal plans are for faster. And just back on your first question, we will have additional detail on CapEx in the 10K. But back to the growth rate, I mean, one thing to keep in mind is that the Shanghai facility, we do have a loan facility in place to support that growth, so that helps. And then as our production volumes increase, that generates more cash from the business as well. That allows us to continue to fund additional factories. So I wouldn't necessarily view it as limited as you described it.
Yeah, I think a few years ago I said, I don't know where it was, but a few years ago I said my estimate is that Tesla would grow at an average compound annual rate of in excess of 50%. I still hold to that belief.
Thank you. Let's go to the next question.
Our next question comes from Gene Munster with Loop Ventures.
Good afternoon and congratulations on the progress. First question related to Cybertruck. You mentioned you'll sell as many as you can make. Can you remind me how many you think you can make and any thoughts on the cost of production for making those Cybertrucks?
I think we don't comment on those detailed numbers, except the demand is just far more than we could reasonably make in the space of, 3 or 4 years or something like that. So the thing we're going to be really focused on is increasing battery production capacity, because that's very fundamental. Because if you don't improve battery production capacity, then you end up just shifting unit volume from one product to another, and you haven't actually produced more electric vehicles. So that's part of the reason why we have not, for example, really accelerated production of the Tesla Semi, because it does use a lot of cells, and unless we've got a lot of battery cells available, then say like accelerating production of the Tesla Semi would then necessarily mean making fewer Model 3 or Model Y cars. So we got to really make sure we get a very steep ramp in battery production and continue to improve the cost per kilowatt hour of the batteries. This is very fundamental and extremely difficult. So we're going to do like kind of a battery day, just to kind of explain more about this and what our plans are. I think probably it's going to make sense to do that after the end of this quarter, because I think it's going to be kind of an intense end of quarter as it was last quarter. So tentatively, sort of in the April timeframe, we'll do a battery day and kind of go through what the challenges are. How do you get from here to, I don't know, a couple thousand gigawatt hours a year or something?
Great, I'll look forward to that battery day. Elon, you also mentioned in your prepared comments about other products that may come up, and the only vehicle not announced for Master Plan Part 2 is a high passenger density vehicle. Any light that you can give us regarding that project?
Yeah, going back to what I just said, we've got to improve the total battery capacity. Otherwise, we add complexity, but we do not improve the number of vehicles on the road. Will we do, some sort of high-capacity vehicle at some point? Probably, but we need to make sure we got the batteries to make cars that are ready on our plate. And it's just generally true. I see some I think sort of sensible comments by Ark Invest, where they're pointing out that really people do prefer to drive in their cars mostly by themselves. And like the average, the average number of occupants in a car, I think, is like 1.2. And maybe with autonomy, maybe it'll go to 1.4. Maybe. But I'm not sure if it even goes there. So, will it make sense just for us to do sort of a minivan or, sort of Sprinter-like van at some point? Probably, but like I said, we got to solve this battery. We got to scale battery production to crazy levels that people cannot even fathom today. That's the real problem.
Thank you. Let's go to the next question, please.
Our next question comes from John Sager with Evercore ISI.
Hey guys, thanks for taking my call. I want to talk about the differences between the Model 3 and the Model Y beyond the sort of 10% rule of thumb just around cargo and size. Are there other features that are going to differentiate the two models? And then as a follow-on to that, you've talked in the past about how Model S sales grew with the introduction of Model X. So are you planning on setting up your production facilities to align with that thesis, that essentially Model 3 sales will expand alongside the introduction of Model Y?
We're not quite sure what's going to happen, but it is true that the introduction of Model X actually increased Model S sales. Because people would come in and look at the Model X and they said, okay, I prefer the sedan, and we're worried that X sales would cause S sales to drop. They actually caused it to increase. From our standpoint, we're not too worried about demand. We're worried about production. It's make sure we get that production ramp going and reach volume production as soon as possible with the Model Y. It's hard it's always hard to predict what that means. That the exponential part of the S curve of production. But production pretty much always follows this S curve, or it's kind of like a herky-jerky S curve. And you can easy to predict what it's going to be like in the beginning because it's slow, and it's easy to predict what it's going to be like at the end. But that intermediate portion of the S curve is very difficult to predict. So and it involves a massive amount of hard work and just reacting fast to issues that arise. I think we're just gonna go as fast as we can with the Model Y and make sure it's a great product. I think there are some things that will differentiate it, but not something we want to talk about in this call. And I think so. When people do a teardown of the Model Y, I think they'll be impressed about some of the things they see.
And just to add to that, I think it's important to keep the Model Y launch in context of the next 18 to 24 months. What we're working on here between Berlin and Shanghai and Fremont is to have 3 and Y locally produced in all locations.
Yeah.
And so Model 3 is expanding as Model Y is expanding. There may be ups and downs of various factories as we get to the journey of having these products on the major continents.
Yeah.
Also, the rule of thumb of 10%, I think you need to see it. When you see the car, you'll realize that it's not just a 10% different car. It's not just that there's more change happening, like to the customer's perspective as well.
All right.
Thank you. Let's go to the next question, please.
Thank you. Our next question comes from Colin Rusch with Oppenheimer.
Thanks so much, guys. Can you speak to the pricing strategy in light of the China price reductions as well as the mission to increase EV adoption? Is there a target for gross profit or operating profit on a per vehicle basis that we should be thinking about, or how should we really frame that for ourselves?
We're trying to make the cars as affordable as possible, as fast as possible, while maintaining reasonable, while still being at least a little bit profitable and growing the company like crazy and having good free cash flow and accumulating a cash balance. Zach, anything on that?
No, I think that's very fair.
Yeah.
I mean, our order rate supports the pricing that we have right now. We're working very hard to reduce costs and expand production because we feel from the data it's pretty clear that there's a lot of interest in our products. And so as what we're working on is to increase production, increase availability of the products with time. And the price reduction in China, kind of the first step towards this global localization, more accessible price. And we'll continue to work on cost reductions in China as we do in Fremont and grow production.
Yeah, I mean, the thing that's really going to probably just have a profound effect on our financials is high volume and high margin, obviously. And that high margin part comes from autonomy. So do people buy the full self-driving package or not? And do they buy it worldwide or only in certain places? For example, our autonomy is not as good in China as it is in the U.S. So fewer people, a very small percentage of people buy the FSD package in China. But as we fix that, then we'll see a much higher percentage of people buying it. And as we get closer to full self-driving, that's just going to become more and more compelling. So that's, from a financial standpoint, that's the real mind-blowing situation, is high volume, high margin because of autonomy.
Okay, and then just shorter term, there's significant discussion in the industry around moving to higher voltage on the powertrain, and then, some challenges around the supply chain's preparedness to support that. Separate from the battery pack, since we'll talk about that in a couple of months, can you speak to the areas of focus on powertrain technology-driven cost reduction over the next 12 to 24 months that we should be thinking about?
Well, powertrain is pretty damn good. I mean, it's way better than anything else out there by a country mile, It's worth noting, for example, that the Model S has like a 100 kilowatt hour pack. The Taycan has a 95 kilowatt hour pack. The Model S is steadily approaching 400 miles range. The Taycan has 200 miles range. So we must be using that energy pretty efficiently, and the powertrain is a big part of that.
I would just say that focus is on cost on the powertrain. When we're thinking about technology innovations, it's how do we continue to drive the cost down?
Yeah.
And that's through voltage is maybe one angle, but there are certainly others that just enable more power density and lower cost.
The plaid powertrain is like mind blowing, I think. Yeah. Coming out later this year, end of the year probably. That's our goal. Get the plaid powertrain out end of the year. And then it's going to be like, this is like alien technology. It's insane.
It's all about that.
I didn't even think we could do that. Yeah, I mean, honestly, I thought it was no way. This kick-ass engineering team, Tesla, tells a little about hardcore engineering.
Great, let's go to the next question, please.
Our next question comes from Emmanuel Rosner with Deutsche Bank.
Hi, good evening, everybody. So in your slide deck, you had the comments around average selling price being stable or thereabout in 2020. Can you maybe walk through some of the puts and takes, how you see sort of like that metric evolve? Obviously, you have the Model Y, which probably would have initial, higher pricing, and then the China Model 3s at a lower price. So I guess what are the puts and takes for what you would see as sort of like stable ASP in 2020?
And make the price better and better. Increase the value.
We don't want to really comment on prices and stuff. I think, we'll adjust according to what the demand looks like. I mean, like right now it looks pretty good. Maybe that'll change, who knows? Yeah.
But I think the way you described it is fair. So, relative to the current Model 3, China Model 3 pricing is slightly lower. And our Model Y pricing is public on the website, so you can see that it's clearly slightly higher than what Model 3 is out of Fremont. How the mix of those three products nets out over the course of the year, we'll see. But I think it's probably fair at the moment to assume the mix of those is fairly stable in terms of ASP when you average them together.
Yeah, I mean, the affordability of our car in China improved radically because of, very, tariffs mostly gone away. purchase tax exemption, local pot supply, not having to spend a bunch of money to transport it over the ocean. So the affordability is night and day for a car in China.
Thank you. Let's go to the next question, please.
Thank you. Our next question comes from Dan Lady with Credit Suisse.
Hi, good evening. Thank you for taking the questions. Just want to follow up on the question on capital raise. So given the cheaper cost of capital, and this is a real competitive advantage for others, why wouldn't it make sense to raise capital to either pay down debt or to pursue acquisitions, especially bolt-ons that can help you accelerate capabilities in autonomous or battery technology?
I mean, if you know of any acquisitions, we'd love to hear about them. Yeah, sure. Sounds great. Who should we acquire?
Well, given the importance of autonomous, I imagine that this is an area that you would want to accelerate if you view it as a crucial competitive advantage.
We're not aware of any one that we'd want to acquire.
And debt pay down?
Diluting the company to pay down debt doesn't sound like a wise move.
I think I think the broader, there's been a couple of versions of this question over the course of the call. I think what we're saying more broadly is that as we look forward on the cash generation from the business relative to what our plans are, we are not constrained.
Yeah, we're going to pay down the debt just, as time goes by, and we paid down half $500 million worth of debt last quarter. So we'll just keep steadily paying it down. And yeah, so yeah, right. But yeah, I don't think we have anything more to say on that front. Really.
Okay, thank you. Let's go to the next question, please.
Thank you. Our next question comes from Pierre Farragut with New Street Research.
Hey, thank you for taking my question. Elon, I wanted to come back on batteries, and if I look at the end of this year, you should have 800,000 units in production capacity for cars. So that's, if you add to that Model X and Model S, and then the energy storage business, it means you need probably north of 60 gigawatt hour of battery production capacity. So where do you stand now, and how do you get there? And then it looks like your competitors, or those who would like to compete with you, seem to be struggling to grow battery capacity. So if you can just take us through what you're doing differently, why you're confident you can do that, and it looks like nobody else can.
Well, I guess, a lot of people sort of made fun of us for not, being able to grow, build cars and build capacity, and it's like now it turns out actually even the pros have trouble with it, it's pretty hard. But the fact is we've already demonstrated massive growth in cell production capacity at our Gigafactory Nevada. And, you have to go from the cells to the modules to the pack. So it's not just cell capacity, but also module and pack capacity. So we've just gotten pretty good at that. And we've worked well with key partners like Panasonic. Panasonic relationship has been excellent. They've been a great partner with us for many years. We've added some additional partners at a smaller scale, with LG and CATL. I will have more to talk about this in detail in Battery Day. Like I said, probably April. We've got a very compelling strategy. We are super deep on cell, and cell through battery. So cell module battery. Drew, is anything you want to add to that?
Thanks. I think you said it all.
We are super deep.
Yeah. It's a cool.
The rabbit hole goes down pretty far. 7 days a week. We did 7 days a week, yeah. Battery production. Man, do we know a lot about batteries. Jeez.
I think so. The only thing I would add is, the only thing I would add is, we do have a decade plus of experience of not just like
what a cell should be, but how to integrate it into the product, and that's really helpful.
Yeah, absolutely. And how to manage the cell and the module and the battery and through different weather conditions and different environmental and different charge regimes. And wow, we really know a lot about batteries. Yeah, it's next level.
Okay, thanks. And Zachary, maybe a quick mundane follow-up for you, if that's all right. Can you give us a sense of the impact of the ramp of Shanghai on your COGS in Q4?
Yeah, we were negative gross margin on the products that we built in Q4. But the team in China, I think, did a great job managing costs during the launch. And so there was a slight drag associated with it, but not terribly significant.
Okay, and let's go to the last question, please.
Thank you. Our last question will come from Joseph Osha with JMP Securities.
Further to the conversation around cell technology, I'm just wondering if you can comment on what the plans are for the Maxwell technology that you acquired, either as a capacitor or a dry cell or what have you. Thanks.
Well, like I said, we're going to talk about this in Battery Day, which is probably April, and then a lot of these questions will be answered. I think it's going to be a very compelling story that we have to present. I think it's going to actually blow people's minds. It blows my mind, and I am, I know it. So I think it's going to be pretty cool.
Maxwell, that ultra-cap technology is kind of part of the plan.
It's an important piece of the puzzle, yes. I think like some of this sort of retail investors have managed to put together several pieces of the puzzle. They seem to have the most insight.
I shall have to read the blogs more. Thank you.
All right, you're welcome.
Thank you very much for everyone for all of your good questions, and we will speak to you in another 3 months. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, this concludes today's conference call. Thank you for your participation. You may now disconnect.
All right, guys. Well, that was one for the books. It's been a long stream, about 3 hours. So if you stuck with me all the way until the end, thank you, thank you, thank you, thank you, Stephen. And thank you, everybody. And I will see you tomorrow with a brand new video. It's time to keep moving forward. And I hope this worked out for everybody. And wherever you are, just thank you, thank you, thank you again. And talk to you soon. Bye. Have a great day or night.